Welcome traders. Welcome to the Elliott Wave revision webinar. Yeah, with yours truly, Richard. Now, let's just jump into it because there's many things that we need to we should go over. Yeah. So the structure of this webinar, basically, let's say, for instance, this webinar will be based mostly on technical analysis on Elliott waves. It will contain Fibonacci measurements. Divergences, structures, structural types, etc., and all the basic, all the leading analysis tools which I'm using for my own analysis, let's say, or for Orbex traders, etc. So first things that we're going to do is we're going to go through the analysis, yeah, basically through the ebooks first, yeah, part 1, part 2, part 3. Part 4 is the most important one, which will be released very soon for you guys, right? But it will be reserved for live account holders for Orbex traders, alongside with many other special tools and advantages for these type of serious serious people, serious traders. So yes, now let's say, for instance, I will be taking questions, but for now I'm just gonna go over the so some of the aspects. Yeah, so just scrolling down the actual content, right? So I will actually explain to you what this principle is in some eliticians' views, right? Um, as you may have noticed, if you downloaded the Elliott Wave ebooks, and by the way, they are basically for the ones who are inside the actual room on GoToMeeting. For the one that are actually attending, there are some handouts there, so you can actually download all three parts. Actually, the three parts of fourth part, as I said, will be released very soon. So let me just explain to you from my own perspective, personal opinion, of course, what the Elliott Wave principle is for me, right? Before I do that, I would like to let you know that everything that I'm about to say or do is not implied to induce or influence you in any way. These are just my own thoughts and should not be treated as an investment advice. So now that we have that out of the way, we'll just go straight into it, right? So the edit wave principle. And by the way, should you have any questions, there's a question box right there in the meantime, right? If you can shoot the questions, but I will allocate, after we're done with the first three parts, and just for me to give you guys some further thoughts in regards to these ebooks which I've prepared for you guys. I will be taking questions later on, yeah, and then we're gonna do some analysis, live analysis, of course, right? I will share with you some thoughts and then take more questions. But then at the end of the course, what we're gonna do is we're basically I'm gonna give you guys some very important insights which I'm seeing right now on the charts, right, which I have prepared for you guys. So yeah. So we're going to talk also about the fourth part, which is the most important one. It actually contains the structures, yeah, all of those structures. So we're going to go over each and every structure type. So yeah, so let's say, for instance, the Elliott Wave principle. What is the Elliott Wave principle, right? What does it represent? So, it's a very complicated, complex thing. For me, it's basically the price action, right? The price action right here, what we actually see in front of us, right? It can be labeled. Yes, it works under certain guidelines or rules, right? On specific measurements, on mathematical measurements. It is, from some traders' views, this represents human beings, buy, sells, emotions, right? So it somehow the market is driven by mathematics, and price action unfolds in swings, which can be measured and predicted under certain guidelines. Right. This is what the Elliott Wave principle represents. So, in short, it represents a map of human beings, traders, buy sell emotions, right? So as a market sentiment, you would call it, but it's actually labeled under impulsive swings or corrective swings when market is uncertain, where there's a lot of uncertainty going on, and basically when the sentiment is in favor of a dominant trend. Okay. um, do we get part 4? Yes, of course. It will be reserved though for live account holders. So all you have to do is open a live account with Orbex, yeah, orbex.com, and then obviously ask your account manager to give you the download link. And also for the ones who actually get the part 4, they're going to have many advantages, such as besides the part 4, there's also a continuation with a private training session with yours truly, yeah, in which we're going to go over, of course, in private, over certain trade setups, ideas, insights, and you'll be able to pick my brain, ask questions, etc., right? But besides that, you're going to be able to have the final quiz, which there will be a testing quiz at the end of this specific webinar. So for whoever wants to stay at the end and test their knowledge, all the questions are taken from the actual ebooks. So if you read the ebooks, you will most likely know the answers, right? The correct answers, but you will be able to test your knowledge. So today's test will be basically for you to challenge your way of thinking and to see if you understood something from these Elliott Wave ebooks, these first 3 parts, right? But for the ones who actually have the 4th part, as I said, there will be a private session with yours truly, but also entrance to the advanced sessions with closed door, upcoming advanced sessions, which I'm gonna host for the live account holders for Orbex, right? So let's just get into it. Yeah, I went a bit on Elliott Wave principle and discussed a bit about it, right? It is indeed something complex. It's not for everybody, that's for sure, right? So it is a leading type of analysis, but it can be very, very useful, right? And precise sometimes, right? It's not perfect. It is imperfect by nature. This is how it works. This is how human mind actually works. Because as I said, it represents human beings by cells emotions, which can be mapped, labeled, and predicted, of course. Sometimes, most of the times, sometimes it's imperfect by nature. That's the way it is, right? It is fractal by nature. What I mean by that is the fact that waves actually contain subwaves, and they somehow reflect and reappear. Patterns actually reappear, and I will give examples during this, and basically how, let's say, for instance, how I was able um, to predict, let's say, for instance, on the euro dollar, the actual rise right here. And this was actually this was a video published, and also a post published on the Orbex blog, right, in which I'm explaining this fractal pattern right here, which as I said, reappeared. There are reoccurring patterns, and this pattern was taken from here, basically from March 2015 low all the way down to December 2016 low. So this very complex structure right here reappeared right here from starting with 25th of May 2018 until roughly August, middle of August 2018, right? So for those of you who are familiar with this charting station, yeah, it's not a trading platform, it's a charting station. I'm just using them for the Elliott Wave labels. So basically what I said here is the fact that we could have actually a rise would occur, right, as per this text, small text right here, yeah. Basically for the euro to possibly start a bullish run. Yeah, and if I load the new bars from there, that's exactly what happened. And my main thing was basically noticing this fractal pattern, right, which reappeared So I was actually inclining for a right. Not to mention that the wave count for this corrective structure B um, in a complex structure in this B will zoom on to this right later on. So let's just continue, right? So if you have any questions, and I'm sure you do, just write them in the chat box. It will be good if you're on Facebook Live, if you're on YouTube or something like that. Then you will need at one point to jump on to register. There's a registration link in the description, so you can actually get the quiz, but also get some take part of for these special insights which I'm actually seeing, especially let's say for instance, nice and short before we go to the analysis and before I actually continue with the ebooks, right? um, will actually tell you what I'm seeing in the markets, right? So there is a possibility for the dollar to soften, for the US dollar to soften according to the current wave counts. There is a possibility for the euro US dollar to continue that move on the upside, and we'll go through each and every market later on with the insights and technical analysis, live analysis for you guys here. Also, we'll go on the metals, gold and silver, but most importantly, I'm seeing some possible spike in the VIX, the volatility index, which could translate as something possibly occurring as something similar to uh, the beginning of February 2018, when Dow Jones actually lost 3,500 points and S&P 350 points. So it would be interesting, right? Now let's say, for instance, just for you guys to, we'll bring the chart back right here. Yeah, this is the Dow Jones. Yeah, on the 4-hour chart, and the way I'm labeling this, this is the February drop. Yeah, it was epic, right? And I do have an insight on a video somewhere around this zone in which I'm explaining a possible ending diagonal and something possibly coming, and it did, right? And then this happened, the drop, right? But for this drop to be considered as I mean the only correction, right? Not really, it's not really possible, I would say, because in a corrective sequence, you would need at least 3 swings, right? An ABC or a WXY complex, or even, WXY in a triple free. So the way this moved is, this cannot really be labeled as a triangle neither, right? So the way I'm labeling it is as a double free, WX, and then A, B in a running flat, and then 1, 2, 3, 4, possibly 5 in an ending diagonal, and an overshoot right here about 161.8. So I am eyeballing a bit of a 27k, let's say, for instance, to see. I'm curious to see what happens, what could happen there, right? So moving on. Now that you know what I'm thinking, let's say, um, we'll continue. We'll continue basically with this thing. So I am sharing some of my own thoughts in regards to this method. Yeah. Um, so you guys, I'm pretty sure that you read everything. If not, then you can actually download them, right? This man was actually a genius, and he discovered something. I mean, he took the what he did is he took the Dow theory, let's say for instance, and he translated it into his own um, way of thinking by using the Fibonacci sequence, yeah, and the golden ratio, obviously. So he noticed the fractal pattern, the fractal by nature, how price action actually unfolded with subwaves, and he was able to give us something very, very valuable, which is a way of labeling and basically getting rid of the noise behind the price action swings, candles, and basically how everything actually unfolds. So in this market, let's say for instance, some traders might think that the market moves in a chaotic way and all this. From my point of view, and I've been doing this for years, it's really not moving chaotically. Everything is organized, and everything can be predicted at one specific point. There's just like by using Elliott Wave is something like putting the pieces to the puzzle together, and somewhere along the line, patterns actually mm, appear, like they reveal to you. Yeah, if you have obviously the right enough knowledge, and if you're able to spot them, right? Not to mention dominant trends, impulses, but the most challenging the most challenging part in using Elliott waves is corrective patterns. Yeah, my only thing to my only thing that I mean, the only thing that I could actually tell you, and the best actual advice, is to know your patterns. Yeah, corrective patterns is basically the best thing that you can actually know. So in this Elliott Wave fourth, let's say fourth part, I am actually going through and explaining in detail um, all the structures. Yeah, for instance, the zigzag, and how they actually how they actually unfold, how they act as a bridge for double and triple freeze, and all this, how they are mapped, labeled, but specific, of course, points, explanations, which with obviously important aspects and guidelines for these specific patterns. So next we have the flat, also a bridge for combinations, yeah, for double freeze, triple freeze, etc. And let's say further on expanding, because these flats, they come in three forms: simple, expanding, and running flats. They are very common. If you ask me, it's the most common structure that I've seen. Yeah, very rarely. A zigzag is like a zigzag. I would only look for it in a wave 2, very rarely in a wave B. However, yeah, these things appear in specific waves, right? Mostly, I mean, the most common structure would be pattern would be basically the flats, right? Expanding and running flats. Simple flats occur medium, let's say. So we have the running flat next, and also guidelines for each. As I said, I'm explaining this in detail, because this is the most important aspect in using Elliott waves: how to label your corrective patterns, right? This is the best thing that you can do, because this could actually prepare to, because what is trading after all? What we want is uh, yeah, Georgia says she hates wave 4. Well, I actually love Wave 4, because it's a special type of wave. It tells a lot by its retracement. Usually it's 38.2 of Wave 3, but it tells a lot for the next expectations. And I will go into each and every wave, and how they're measured and everything, using Fibonacci later on when we're charting. For now, we're just having a conversation, and keep the questions coming, guys. I will be taking questions. So for you, for those who actually read those ebooks, it would be nice to get your feedback right there. But also, it would be nice. I'm sure that you have questions, right, in regards to those ebooks. So everything that I said right there, I said it for a specific reason, and those who read it should I'm sure that you paid attention, but there are a lot of important details there. That's what I can say. So yeah, I mean, let's continue with this part 4. So running flats, and then complex, I mean, how they act as a bridge for combinations. Yeah, as you can see, a triple free right here in a triple flat. Yeah. um, then the triangles, type of triangles, you can find this mostly everywhere, but not the way I'm actually explaining them right here, and the way they're located, how they're located, the sequence of it. These things are quite important, right? And this is the most common basically triangle, the running triangle these days. Yeah, which I've noticed, for instance, and I actually I'm very glad when this actually occurs, especially in a wave 4. And then going into combinations and very important things right there, because mostly the corrective structures these days are complex, and I will actually explain why. Because the current market cycle is actually a corrective structure which is correcting a previous correction, hence the reason for the conflict of degrees and conflict between corrections, right? So hence this is precisely why complex structures actually appear in the markets, right? So some of you will say, okay, well, where are the impulses? Well, there are impulses in the favor of dominant trend. They're just not there yet. Everything needs to basically unfold towards the market's destiny, and of course towards the projections, right? Now, next, of course, in the Fibonacci measurements, I have some examples right here, which are very valuable, if you ask me, in type of, structures and how they actually unfold in motive waves, right? And how they're measured. For instance, in an ending diagonal, leading diagonal, and all these things were actually explained in part 3, right? And the law of alternation and how corrections alternate one another. Also impulses, everything is happening for a reason, right? So yeah, pretty much. But this thing you will be able to download it, right? If you're a live account holder. So just sharing it with you basically what wave for what sorry what part 4 would be all about, and giving you a preview, let's say, right? Okay, have a question right there, but you should ask your account manager to actually get. So Kelvin, contact your account managers for you to get the ebooks, right, and the invitation for these sessions and etc. So as I said, right, everything that I'm actually doing right here is to prepare you guys, right, for and with the traders. That's what I believe in. Now, the point is Elliott Wave trading and the way of analyzing the financial markets is this method is, as I said, it's not for everybody, right? So it's something serious. It's for the people who are able to think outside the box and to question everything and be able to also counter their trading emotions, because in Elliott in by using Elliott Wave, you're able to, let's say, have a main count, right? Because everything evolves around the wave count, because the wave count is done on specific guidelines and rules, which you have in front of you right here, right? These are the 3 main rules which R.N. Elliott left us with as a legacy, let's say. So wave 3 can never be the shortest impulse wave, right? Regardless of the structure. Even if it's a leading diagonal in an A or 1, or if it's an ending diagonal in a C or 5, right? Does not matter. Wave 3 mustn't be the shortest wave, shortest impulse, right? And this is serious because this is how you could actually correctly label a structure, yeah, an impulse, let's say, because wave 3 happens in an impulse. An impulse wave has 5 swings, 1, 2, 3, 4, 5. A corrective wave has 3 swings, 3 legs, yeah, either ABC or WXY, right, in a complex structure. So wave 2 can never go beyond the start of wave 1, and this is a very valuable guideline and rule, because if wave 2 goes beyond the start of wave 1, then the structure changes. It's something else. It's not what you thought. Then this puts you in an advantage, right? Now wave 4 can never cross in the same price action territory as wave 1. This is not true. Wave 4 can actually cross in price action territory of wave 1, but not in an extension. By extension, I mean a rally in an impulse, right? I mean not in an impulse. If it's an impulse, it is a motive wave. It's okay, right? But motive waves are formed out of extensions, which implies an impulse, or leading on or ending diagonals. Wave 4 will always enter the price action territory of wave 1 in an ending or leading diagonal, right? So keep that in mind. Now, let's say, for instance, moving on, right? Um, as say on the basic sequence, right? How the price action actually unfolds right here. Okay. Now, as I said, the dominant trend is formed out of five waves: 1, 2, 3, 4, 5, right? Which we have right here: 1, 2, 3, 4, 5. The motive waves, right? And dominant trend in with the waves which actually move in favor of the dominant trend are 1, 3, and 5, right? The pullbacks, wave 2 and wave 4, are the corrective swings, and under no circumstance shall they be labeled as 1, 2, 3, 4, 5 ever. Not 2, not 4, not B, right? So 2, 4, and B or X waves mustn't be labeled with 5 waves. I mean 1, 2, 3, 4, 5 by this. If it's a W, X, Y, X, Z, then it's a whole different story. But let's say, for instance, this picture is displaying something important, right? Wave 1 is formed out of 5 swings, yeah, because it's an impulse: 1, 2, 3, 4, 5. But this wave 5, yeah, is also formed out of 5 swings, and each wave contains subwaves, right? So, for instance, we have 21 moves in wave in this five waves, right? Right. So we have 21 waves in this wave total in this wave one. In this wave one, we have 5 larger degree trends. So you see that the market moves, the subwaves have this fractal by nature. So every wave contains subwaves. Wave 1 is formed out of five waves, but it's also formed out of 21 waves, which are subdivided within this fifth wave, right? I mean, within this swing on the upside. So therefore, we have 1, 2, 3, 4, 5, and then the trend corrective legs A, B, and then C, right? Most traded waves: wave 3, wave 5, and wave A and wave C. But if you ask me, wave 3 and wave C are the ones who eliticians mostly look for, right? Now, I am actually mentioning some things here, yeah. So as I said, a dominant trend is formed out of 5 waves, yeah, because it needs to make progress. It is destined to make progress, and in order for the market to actually make progress in favor of this dominant trend, obviously, yeah, that implies a rally, something that we actually see in wave 3 and also basically in impulse waves, because an extension can actually occur in either wave 1, 3, or 5, right? Depends on the actual on the form. Okay, so yeah, I have another question right here. Yep, well, okay, we'll get to that, Casey. I will answer your question. This is a very important question, by the way. He's asking about the subjectivity of alternate counts. Yeah, and basically traders not agreeing on specific wave counts, and I totally agree on that. Yes, it is very difficult for. There is a saying about this. I mean, if you it goes like this: if you put 10 Elliottians in the same room, none of them will agree. Yeah, everybody sees whatever their mind perceives. That's how the price action unfolds, and that's how human beings are programmed to think, right? So hence the reason why I said previously that using Elliott Wave implies a way of thinking in which you would think outside the box, right? So it is challenging, that's for sure, right? Okay, now let's say that these things are just quick facts and guidelines, and I will go through them very quickly, right? So let's say, for instance, if I were to take a look at these things right here, yeah, at these bullet points. So there are important aspects right here. So let's say, for instance, let's just take one after another, right? So magic number set to 3 and 5. Well, 3, if you have 3 swings, it's clearly corrective, right? If you have 5 swings, then you have a motive wave, right? This puts you in a way of thinking in which um, you would look for the dominant trend. This means that the actual structure might not have finished yet, right? So this puts you on an edge. Either if you're looking for a C wave, right, or let's say, for instance, a third wave. Okay, so this will mostly clear up when I'm gonna start charting, right? So for now it's just theory, but what I want to do today is go for real and go start charting. And by the way, some of you guys actually know me, right, and are very active with and thank you, by the way, for this. Thank you for being so present with the webinars and sessions and videos which I'm actually doing. Yeah, so let's continue. A bearish Elliott wave cycle is formed of 3 impulsive waves, 1, 3, and 5. I've already mentioned this, and 2 corrective waves, wave 2 and 4. After which, the trend corrective legs actually correct the entire swing, 1, 2, 3, 4, 5, which are labeled as A, B, and then C, right? So, yeah, this, let's say, for instance, if you were to use a simple way of thinking, somewhere along the line, I guarantee that you will get caught up in the whirlpool, in a sense that it's not simple. I mentioned this before. It's not for everybody, right? So my only, I mean, the best advice that I could actually give right here and right now would be to, for you, and I'm going to say this again. I know I mentioned it before, but I'm going to say it again. Know your patterns, right? Learn the patterns. Because if you know the patterns, this will disappear and this will open up. I guarantee that this will open up an entire world for you, a whole new world in which you will be able to um, I mean, you will be able to take to see the structures differently. Somehow, I cannot really explain this, but somehow what's happening to me? Let's say, for instance, right? I am able to see some structures and see some moves before they happen. How? Well, it takes a lot of practice. It takes a lot of knowledge, right? But if you know how to measure and under which circumstances these specific swings and waves actually unfold, and if you're able to know how to predict them, yeah, then you have an ace in your sleeve. So, yeah, nothing is perfect, right? I'm not saying that this method is the best one by far. No, I'm not saying that. I'm saying that it's something worth looking into because it is under my own way of thinking. I mean, I think that this could be somehow a law of the universe. Yeah, I said it. It works under the golden ratio and under the fractal by nature. And I will actually give examples, right? I just gave an example on what I used for the Euro USD bounce off, right? And if I take the structure again on the euro dollar, let's say, let me just jump on the euro. Yeah, yeah, okay. Now, let me just give you an example right here, okay? Because most people right here, I mean, right about here at this support, right? When it broke out, most traders they panicked and said, okay, we're directly straight going down to actually fill this French elections gap, right? Well, this is exactly what didn't happen. And let me just do this again because it's quite important. How did I know, right? It is amazing. Yes, it is, but it's not impossible. How did I know? Well, first things first, yeah. When the breakout actually occurred, I saw something else. I knew my structure. So I had the first swing, either it's an A or a W, that doesn't really matter. A, B, and then I was expecting something as either a C wave or you know, a Y, depends on the structure, right? But this, regardless of the structure, this led me to think that something else is coming before a possible drop. Now, the way this is unfolding, yeah, well, I'm looking at the structure as a possible expanding flat, yeah, with a wave A and then B moving past this start of A, and the C wave actually exceeding the end of A, and sorry, in an expanded flat. I was looking at it as a possible running flat, right? Because previously, right here, when this thing started, it did actually do something as a running flat, for instance. Yeah, and I'm gonna go on these sorry, on these things later on. I'm gonna go on the dollar index, yeah, on the daily chart. I'm gonna go on the weekly chart on the dollar index and give a important fractal by nature right here and right here, and this is it. We'll see, but I'm gonna give you guys some important bullet points. This is basically on gold daily chart. Yeah, I have a lot of things to share with you. Crude oil, pound dollar, which is also, this is a fractal pattern on a larger degree time frame on the weekly for the weekly time frame. This is the daily chart, but this is a complex triple free, yeah, WX, Y, X, and then AB, and then the C wave, then AB, and then C, and an ending diagonal, right? So I'm not really I don't think this typical like correction right on the upside is done. I just think it's taking a possible breather, possibly touching the 61.8 of this entire wave complex. We'll see, right? Now, even on the pound, right, when it was at the bottom and everybody was panicked on this bearish volumes, kind of knew this would occur. And check these arrows out. I mean, up, down, who knows, right? Everything is possible. As for the yen, something interesting is happening with the yen right here. It keeps on changing structures, and this retracement did not even retrace enough. Plus, this is the only the first leg of it. So, and this pretty much looks like a leading diagonal, so it cannot possibly be the only leg. Yeah, we'll see. As for the, let's say, on the DAX here on the 2-hour chart, was able to spot this break, and it's a possible break on the weekly time frame. It's quite serious. We'll see if that happens. And I already went on the Dow Jones structure. I'm labeling it as an ending diagonal in the as a possible ending diagonal in the C wave of an ending of a larger degree wave, which is the intermediate B red right here. Yeah, and similar structure for the S&P, but Nasdaq could be one step ahead with the wave count, because there's something interesting happening right here at the edge of the cliff. That's how I like to call it. We'll see, because this is it. You know, this could be in the menu right here, because something actually happened cycle-wise. Something actually happened in February right there when the VIX actually spiked and volatility kicked in, making people to retract from their complacency and stepping into the fear sentiment, fear mode, right? The way this unfolded is typically corrective, right? It's not impulsive by nature or something like that, not even a leading diagonal or ending diagonal at some point, anyhow. But this gives me something right here when it comes to structure wise. 1, 2, right? We have an impulse, we have a complete pattern 1, 2, basically ABC right here in this second wave, and something I mean, could reappear right here, because we have a possible end of structure right here, and this could be set for a spike. We'll see if that happens. Now, if if you guys are interested to find in finding more about this possible, let's say, spike, well, I do have an article. I mean, my latest article right here a few days ago on the 26th of September. Yeah, uh, was actually mentioning, and if you actually take a look at this arrows, I was actually mentioning the rise of the dollar index, and we'll see if a drop would be in the menu, and also the drop for the euro possibly unfolding, and it did, right? What else? Pound, the drop as well. You guys can actually see the charts. There's no need. USD JP1 is still moving on the upside, so it did not go directly. But there is a pattern. I'm gonna go on the 4-hour chart later on, right? Also, the gold did go on the downside, then started correcting more. Silver as well on the downside, but silver is a bit dodgy and creepy if you ask me. Very difficult labeling on silver, the hardest labeling that I have. To be honest with you, I'm having challenges myself with labeling silver. I am seeing the upside, yes, okay, but the way it's moving on the upside, I don't like the structure personally. Okay, we'll go more into it. As I said, I promise I will go on each and every market, metals, forex, indices, all this, right? Energy and everything. So yeah, I mean, even on the, let's say, on DAX right here before, it's hovering around, and I'm gonna go on each and every chart as I said. So yeah, Dow Jones, I was actually mentioning more upside possible before hammer possibly being around the corner. We'll see. S&P 500, Nasdaq, etc. Right? So this article is actually worth being read, right? Yeah, yeah. So let's say let's actually continue with the ebooks, all right? But before we do that, let's just jump on the 2-hour chart on the dollar index, because there is a possibility of a pattern right here, and what I mean by that is an possible expanding flat. I know you guys are shooting questions right here, okay? Yes, PremFX, I actually shown you the daily GBP structure. Yep, all right. This is not supposed to be direct, straight to the point webinar in which I'm going through live analysis all of a sudden, right? This is mostly for the ones who, this is mostly an educational type of webinar in which I'm going through the ebooks, but there will be this as well. There will be live analysis as well going. I said, I promise I will go through all the charts, right? All markets. So yeah, but there is something possibly approaching. We have a bearish divergence right here. Those of you who know divergences, there is a possible divergence right about here, and this could be, this entire thing could be a fractal by nature, a type of pattern, right? So if I were to, the way I'm labeling it, this is as an ABC, right, with the first swing on the downside happening from the top right there, with this view right on the actual, on the dollar, boom, when it was posted on August 10, and you guys can see this on the Orbex blog. Yeah, for those of you who are following me, even better if you took advantage, obviously, because that's hence the, that's the main reason why I'm posting these articles, to help my to help the Orbex traders. But yeah, it moved down, it moved on the downside, so we have the first swing, and I am looking at this as a corrective structure, right? Because if I were to look on the daily chart, let me just load this daily chart. All right, there we go, DXI, right? um, I am actually thinking that if a drop occurs, right, this entire pattern, this is a complex structure, right? I mean, this cannot be possible. Even if, let's say, for instance, the only way would be to label it as an ending diagonal, but I don't like the fact that it's not converging, right, like this. So it's not really an ending diagonal, it's something else, and most probably is could be a some type of running flat around here, with this being the last swing, the C leg, right? and then starting another complex structure in which this could be the expanded flat for this B wave, right? Implying obviously a C wave. We'll see if that occurs. Now, just gonna give you a quick idea right here. Now, what I'm looking for is a divergence, right? So we have the main divergence, but the secondary divergence we don't have it, right? I don't have it. So I'm eyeballing 61.8, which is basically 96 on the dollar index on the 2-hour chart right here. But I will be looking, of course, for a last, let's say for instance, a possible last correction, and then more upside, just enough to give a small divergence right here for me to be comfortable with thinking that the bearish volumes could actually return. Okay, and the euro structure and also the metals, especially, I mean, the gold structure is clearer than silver's. Euro and euro dollar, right, and the GBP USD, they are looking, um, I mean, similarly to the dollar index. Euro USD actually broke this low, so this could actually be an expanded flat. And I'm keeping track of these swings, of course, and regularly posting some ideas when an opportunity could be around the corner for whoever follows, of course, right? um, Now, moving on to this, right? An expanded flat, for instance, right? If this were to be an expanded flat, this would imply 1, 2, 3, 4, and then the fifth leg to give a possible divergence right here, similar to the dollar index, right? So you see how this thing actually correlates. They move inverted anyway. So the 61.8 would actually synchronize at one point with the 61.8 right there. But if I were to look back, there are some other points right here, some vibration levels in which the price action actually vibrated, yeah, and bottoms, and yeah, this type of things. So price action actually vibrates at this specific zone, and I'm curious to see what could actually happen. So let's say, for instance, if I were to measure wave 3 with its correction 4, then the 61.8 would point towards the downside. But this being the wave 1, and if you know the guidelines, and I'm explaining things in the ebook as well, we have an extension wave 3, right? And if we do have an extension, we cannot possibly have more than one extension per impulse. And the impulse is this C wave. It's impulsive. It's not a proper impulse. But anyway, it's impulsive by nature, the C wave. So if this is a wave 1 and you have the extension, right, then wave 5 would resemble wave 1 in duration and length. And it kind of does right now, right? All it needs is a bullish divergence right here. And I'm actually we'll see what happens at the 161.8. And by the way, for those curious, yeah, the exact level for the 161.8 is 1.1476. Yeah, and yeah, somewhere around there. So anything below 1.15 would actually confirm a fifth wave. If it's extended or not, we'll see, right? But usually it should resemble wave 1. So yeah, that's pretty much it. Pound US dollar, I'm actually labeling this as a possible ending diagonal with a bullish divergence right here. But enough about this. We'll go to this later on, right? So you can actually see the labels right here. I'm actually labeling expanded flat, so A and then B an expanded flat, and then a possible rally in the pound, right? We'll see what and how, because the correlations, you see, and by the way, these arrows have been placed on my daily updates, because I do daily updates for my followers, and I'm actually curious to see what could actually happen. That's 114.50 with the USD yen, right? Because as you can actually see, there is a bearish divergence right there, and this channeling in the wave 3 is almost finished, followed up by something which looks like the possible end of wave 5. And yeah, we'll see what will actually happen. So let's actually move on with the ebooks right now. We'll have to speed this up because this webinar, I'm thinking that it will actually take a bit too long. Yeah. Okay, well, PrimeFX, if you want a 4-hour chart and this 1-hour chart and all this, I went on them, but you should actually, anyway, ask your AM to fix you up with a private session with me. Yeah. Can you use this principle on gold for us? Yes, Margaret, I will do this on all markets later on, of course. How to count and draw, please show. Well, yeah, that's within the Elliott Wave ebook, right? Those are the guidelines. How you count is basically I will do that, yeah. No problem. But mostly the best thing that I can actually tell you is that you need to practice. Practice makes better. Practice actually makes a lot. So anyhow, um, Mr. Rian van Eck, yeah, you should. I cannot answer that question directly, but there are ways to find me. If I think wave 4 is over, I'm not sure, Georgia, on euro. Okay. Yeah. I'm thinking that. Yes. I mean, if you're thinking intraday wise, it might be because the way euro actually moved on the downside today, it could be done. And if we have a new low, as I said, it would confirm a wave 5. But with that, also the C wave, but also the end of a possible end of yeah. Let me just go back on euro. Possible end of a complex, I mean, a structure in a B wave, right? Which implies, of course, something possibly a rally, right? So yeah. Anyhow, let's move on to our things right here, right? Impulsive or corrective waves are fractal by nature, right? Well, as I said previously, waves contain subwaves, yeah, and structures reappear as fractal. If you don't know what fractal is, well, there are some examples online. Yeah, just write fractal on Google. Always works, right? But um, I'm gonna explain just in simple terms. Yeah, translated into price action and structures. These structures actually these structures appear as repetitive patterns. Similar, they're not a mirror, like they don't really occur exactly the way the previous one occurred, but the there is they look alike, right? That's what fractal is. So let's say, for instance, a weekly chart can actually look like a 15-minute chart or 2-hour chart or whatever, right? And I will give an example on this on the dollar index, and I will leave you guys too with something that you could actually think about. And it's amazing. That's something that I actually used on the Euro USD when I gave the example previously, and I also posted that trading video, trading analysis video for the Orbex traders on the Orbex blog. But yeah, I'm gonna leave you guys with something to think about on the dollar, because let's face it, everything actually moves with the dollar, right? So dollar is getting a lot of attention right now with everything that's happening. So um, Percival, there are ways to get in touch with me if you wish to receive those updates. Usually you can find me on the Orbex blog, but there are other venues. Okay, I'm just reading a question right here for William. I just went on a Euro USD, William, and I explained the actual structure. So I'm actually labeling Euro USD right now in the possible end of a B wave, bearish corrective B wave, and would be curious to see if an upside actually occurs in a potential rally. That's all I can say, but we'll see if that occurs, right? So this trading day will most likely, I mean, will end soon, and we'll see what happens tomorrow. Today we had the ADP and the non-manufacturing, right? Which was, I mean, an incredible day for the dollar, right? These things, I mean, fundamentals, and you will notice by using Elliott waves, the fundamental, by taking a look at the um, economic calendar, and excuse me guys, I'm talking a lot here, I'm speaking a lot, and yeah, by taking a look at the economic calendar, you will notice that by using Elliott waves, somewhere along the line, these fundamentals and these releases will I mean, most of the times, they will synchronize with your waves and wave counts. It's incredible. Yes. So, all right, I will. Okay, so impulse free contains an extension, and by that, it means a rally. Yeah. And this is the most traded wave. Traders actually trade this wave, specifically the free of freeze, which is the extension within the extension. I know I said that you cannot have an extension, I mean more than one extension per impulse, but if you're talking about this specific impulse free, remember it's fractal by nature and it contains subwaves. So the subwave, the third subwave of this third wave also contains an extension itself, right? So yeah, that's the reason why extensions actually occur in the third free of freeze, and that's the most traded wave. The free of freeze is called, right? The rally within the rally, the most powerful move, and what makes it an impulse, and what makes it a dominant, the dominant trend, and the market actually makes progress with that wave. Then, of course, it's corrected by the fourth wave, which is basically after so much, um, power, and the dominant trend is clearly revealed by now, right? Wave 4 represents the take profit, most likely. And there's a struggle right there before the dominant trend actually takes over one more time for the fifth leg. And then, of course, this entire 1, 2, 3, 4, 5, which could actually be a 1, right? Because waves are fractal. So if you have 5 waves on the upside, yeah, it's either an A or a 1 for a larger degree. But that larger degree is obviously finished and it needs to be corrected. Hence the reason why the trend corrective legs actually correct the 1, 2, 3, 4, 5, right? So yeah. Now, this is actually quite important. Yeah, waves 2 and 4 can have two forms: simple form that are 3 moves and complex form that of 5 moves, right? By complex 5 moves, yeah, what I mean by that is the triple free WXYXZ, right? Which I'm going to, which are explained in part 4, which, if you ask me, part 4 is the most important one because it actually contains all the structures, all of them. Yeah, when it comes to zigzags and how they act as a bridge for combinations for complex structures, flats, type of flats, simple expanding, running flat triangles, double, triple freeze, complex, right? Complicated structures. So those are the most important. Structures, and the most valuable thing that an electrician could do is to correctly label a corrective structure. End of story. Because everybody trades and everybody is interested to trade the big move, the impulses. Well, 1, 3, or 5. Most importantly, 3. But anyhow, when an impulse is around the corner, by using Elliott Wave, um, you would most probably be able, by using Elliott Wave correctly, of course, you will most likely be able to be one step ahead and see the turn before it happens. as I gave an example right now with the Euro USD, right? When everybody was, when not everybody, sorry, when some traders or analysts were bearish because they saw a possible breakout and euro is going directly to, to the French elections gap. Well, I noticed something, and this is what Elliott Wave could actually give you as well, right? This is what it's all about: correctly labeling. Now, the C wave can transcend into impulse wave 1. Well, yeah, but only under a leading diagonal, right? Because it kind of looks like a C wave, but um, I mean ABC, right, with the C transcending into wave 1. But in fact, the reason why I said this is because it looks like an ABC, but in fact it's a 1, 2, 3, 4, 5 with an overlap for 4 and 1. Right? So this is a tip, and most likely wave 1 is very choppy. It's very hard to usually it's very hard to notice, right? Because it doesn't give you a straight up impulse, and it's not clearing up the doubts, right? Wave 3, yes, of course, it is clearing up the doubts once the fundamentals actually turn in favor of its destiny. But wave 1 is still, let's say, how should I put this? Um, Still a question mark, right? Wave C always unfolds with a 5-wave sequence. Yes, never label a wave C with an ABC, yeah? And wave B, wave X always should be labeled with a wave, with a free swings sequence, yeah? Under no circumstance should a wave B or wave X be labeled as a 1, 2, 3, 4, 5, ever. Now, moving on, yeah, the ABC corrective legs. Usually, let's say, for instance, wave A would terminate its last swings within the price action of territory over wave 4 of the previous degree, right, of a larger degree. Wave B would correct 50%, 61.8 usually, but it is known to overshoot, right? And reaching up to 78.6, but even exceed the start of A. Wave B is indeed a surprise, I would say, right? It's the cause of complex structures. So caution is needed with this wave, and also with the X wave. Yeah, these are the most complicated waves. Waves B and X. Yeah, and wave 4, of course, but not so complicated as a wave B. A wave B, and just for me to give you a quick tip here. Yeah, from experience, I'm going to tell you that, let's say, for instance, if you're labeling a wave 4 and it kind of extends over time and you're still continuing with the labeling, most likely it's a wave B, right? Because a wave 4 should not extend so much in time. So when you notice that wave 4 is extending in time, it's taking longer than it should, then you should consider trying to take a look at the larger perspective, in which it would imply wave 4 is not in fact a wave 4, and in fact it is a B wave, right? And this will put you on a very valuable position. Yeah, these are one of the things. And wave X, of course, would put you in the same position but under a different wave count, right? Now, oh, so many questions. I cannot answer to them directly. I will hold them for later, please, and we'll be able to. I mean, I will take a pause and only answer questions a bit later on. Please understand, I'm trying to go through all these ebooks and then go to the most important and interesting part, when it's in fact live charting. And I'm pretty sure some of you guys are here specifically for that. Now, let's say, yeah, at the end of the fifth wave, right? The wave ABCs, and this is important because at the end of the fifth wave, the most valuable thing that a technical trader would actually would be a divergence, right? If, for instance, the trend is a bullish trend, right, and the wave 5 is a fifth wave is ending, right, most likely would be accompanied by a bearish divergence, right? And this is precisely because in an uptrend, let's say for instance, when a new high is created, yeah, the volumes would actually decrease. So this would imply, I mean, this would say that the bulls, they push the market higher, but they're not justifying the move with enough liquidity in. I mean, they're not justifying a continuation, right? And yeah, this leaves the bears to with room to take over and basically drag the market on the downside, right? And thus the ABC corrective trends actually start, right? So as I said this before, that wave A actually terminates its first swings in the previous wave 4 price action, right? And most likely not only wave A, right? But when in an extension, for instance, in a third wave, right? Wave 4 would typically end its last swings within the wave 4 of a previous degree, and this is a very valuable guideline right here. Wave 4 would typically end its last swings in the price action territory of a previous 4 of a lesser degree. What I mean by that is wave 4 of wave 3, the subwave of wave 3. Yeah, the previous wave 3. So let's say, for instance, if we were to be in a wave 4 minor degree, yeah, wave 3, if it extended the wave 4 of the minor degree 3 would be the minute degree wave 4, and minor wave 4 would typically end in the price action territory of minute 4 of minor 3. Yeah, let me just give you an example. You see, 1 2 3 in extension, 4. This 4 is ending in this 4. Yeah, pretty neat, right? And now all we need is a divergence. What if? Everything is possible, right? Nothing is guaranteed. Nothing is 100%. This is what I learned. But if the structure changes now, this is what Elliott Wave would actually do for you guys and for me. I will know that the structure indeed changes, right? I would know that the structure for the upside would be invalidated. However, it's not invalidated yet. And remember, this is a B wave and it can actually exceed the start of A, no problem. It's not a wave 2, right? Because I'm going to give you a very, very valuable notice right here in regards to a wave 2 and how to start labeling correctly. Yeah. Not to mention that, you know, a wave 2 mustn't go beyond the start of wave 1. So if I were to label this as a 1 2, yeah, I wouldn't be comfortable with labeling the Euro USD 2-hour chart with the um, with a wave 2 right here. And this is because mostly because of this, right? The structure appears to be an expanded flat, and usually I do not agree with flats in a wave 2. I would rather, I mean, I'm holding that for the last possible option, but usually I would be comfortable with a zigzag in wave 2, and in the part 4 I'm actually explaining that too, right? So if you do have a zigzag in which obviously the wave B would not exceed the start of A, in which this case it does. So it's an expanded flat because wave B, so we have A, B, and then C. Wave B exceeds the start of A. Wave C exceeds the end of A. So you have an expanded flat. Yeah. This is the structure that I'm labeling, and it took it way too long to unfold as a wave 2 first of all. Hence, remember when I said about wave 4, valid for the wave 2 as well. So it took it so much time, right? Let's say how much time it took it from the 28th of August. Yeah, 1 month and a bit. Too much, if you ask me, to be a wave 2. A wave 2 must be either a sharp correction or a zigzag. That's what I would be comfortable with seeing as a wave 2. Now, considering the fact that this, if I were to think that this would be a wave B, and as I said, this is not for everyone, you have to use your mind. Now, if this is indeed an expanded flat, right, and it took it way too long to be a wave 2, let's say I'm not comfortable with labeling a wave 2, I will label it as a B, which it is labeled right here. So if this is a wave B, this would imply a C, right, for this entire swing. I remember another valuable guideline that I'm gonna tell you right now would be a corrective sequence never ends with one small swing, and never label this as an A, B, C. Just like that, and that's it. You will label this as a B or fourth wave, and then you start looking down. No, right? The first swing of a corrective sequence, because this entire swing is actually the start of a larger degree correction. That's the way I'm labeling it. So if you have the first swing, either 1 or A, we already established that the reason why I'm not labeling it as a second wave, but rather as an A, which is this, right? A. The B wave and the second, the valuable notice right here would be always look for complete free waves sequence, complete structures in B waves, right? And when the market moves like this, sideways and with overlaps, you would consider a complex structure, right? And speaking about complex structures, in the next valuable notice and guideline, most complex structures actually occur in the B wave, but what I've noticed is that wave X in a double free actually unfolds as a triple free over a smaller degree. That's what I've noticed so far, and I'm noticing a lot of things, and I cannot possibly say everything that's on my mind. And by the way, there will be I'm actually working on the video course besides this Elliott Wave ebooks, right? Maybe do a proper course, a video course, in which multiple aspects would be um, explained. Yeah. GBP/USD daily forming now on ABC regular correction. Am I right? Yes, expanded flat. I am actually seeing the same thing. Um, I'm not sure if I could answer if it's about to continue an uptrend. Well, I am looking on the upside. We'll see if it occurs, and we'll look for further for signs, right? The best, the sign that I would look for would be a bullish divergence at the end of this current small C wave. By that I mean this, the ending diagonal. If I'm labeling correctly, it is subjective by nature. As I said, you can put 10 eliticians in the same room, they will not agree. Maybe somebody sees it as a different thing, right? But if you know the retracements, the default retracements, for instance, yeah, what I do know is that if this is destined for a wave free rally, then this wave must not exceed this, right? If it does, then this wave 2 wave count would be invalidated, which means that somehow the structure has unfolded in a different way, and yeah, might have topped right here. But I'm not looking at that scenario yet. Yeah, I am obviously I am considering that possibility. However, there's not enough evidence yet, right? And if there will be, that's what I'm saying. Eliticians will be able to spot this and be ready for the actual change, right? Now, in this in this second part of the ebook, I'm actually going through the wave, each and every wave, right, with specific things. And as I said, wave one is usually choppy and is difficult to spot, to distinguish, because it's most of the times it's taking form of either leading diagonals or so. And it has overlaps, that's for sure. So it's not a proper impulse in which you will label a 1 2 in a zigzag, and then a rally in a free, and the fourth wave does not move beyond, into the price action territory of wave one, and everything is nice and clean. But guess what? The market does not give us that, right? So this is actually, wave one actually represents the change of trend, but it's kind of not there yet unless some fundamental event actually occurs, a big one, which would imply the confirmation and wave three to actually start. But before wave three actually starts, wave two is correcting wave one, and I actually usually with a 61.8% retracement of wave one. And what I like to see in a wave two, as I mentioned before, is a zigzag structure, or a simple flat. Yeah, either a simple flat or a zigzag structure. I'm comfortable with only these two swings in a wave two. And there are reasons for that, because if you think about it, if wave two would have an expanded flat or a running flat can actually occur. But anyway, eh, this would imply more of a complexity to it, and wave two is not designed to be so complex. And this is because even though wave one started, the previous trend, which was, let's say for instance, let's pretend the previous trend is a downtrend, right? And then wave one reacts with a motive structure, leading diagonal, impulse, etc., right? um, then even though wave one started, the previous trend is still somewhat dominant, right? So wave two represents the struggle and the last attempt for the previous dominant trend to take control, right? And that's the reason why simple moves actually occur in the A wave and especially in the C wave, right? Which implies a structure of a zigzag type of or a flat, simple flat. So again, know your patterns, right? And as I said, one valuable tip, wave two, um, I am comfortable with seeing a zigzag or a simple flat in a wave two, right? Now next, wave three, obviously you guys all know that, and it's the most powerful wave. It can go, usually goes to 161.8 from experience, I'm saying, which implies an extension, of course, 161.8 or above. Yeah, 161.8, 200%, or even 261.8, even 300% if it's a super massive rally. And what I mean by this is Fibonacci extensions of wave one with its retracement wave two, right? And let's say, for instance, just for me to give you guys an example right here, um, let's say, should should this be a wave two, right? And if a wave two were to retrace, nothing is nailed in the wall. It has the right to retrace 78.6. It's okay. And if you look at where this 78.6 is, a vibration level, guess what? Right here, before the trend actually started on the upside, right? So if this were to bounce off right here and give a bullish divergence, if I'm just giving a possible scenario, right? That doesn't necessarily mean that you should take my word for it. As I said, this is not an investment advice. We're just charting right here, guys, and we're basically making scenarios right here based on Elliott Wave. Now, if this were to go there, and if this was destined to go up, right? Then the Fibonacci extension tool, well, I mean, this would obviously mean that could be wave three, right? It's either 100% or 161.8 if it's extended, etc., right? So let me just let me just take the Fibonacci extension tool, measure wave one, right, with its correction for this 78.6 right there, right? And 100% would be somewhere around slightly above 1.34, right? But the 161.8 would be somewhere around the 1.374. So if it's extended, then that would imply, let's say for instance, an extension. So an extension would be wave 1, a zigzag in wave 2, right? And then 1, 2, 1, 2, 3, 4, 5. So this is 3. Then 4, retracing the previous price action over wave 4 of a lesser degree, and then wave 5. So this is 3, right? This is also 3. This is 4. This is 3, and subwave of 5, right? So you have 1, 2, then 1, 2. Some messed up right here. Okay, not yet. Not yet done, right? 4, and then the 5th wave, right? This is how a structure actually unfolds. So you can actually see the extension within the extension. What I mean by this is a wave 3 extension, and this is the extension within wave 3. So that's 3 of 3s, right? And this is the 4th wave, retracing the previous price action of a previous wave 4 in this lesser degree, but also this wave 4 is retracing the previous price action of a lesser degree. Pretty amazing, right? And that is how, my friends, head and shoulders formation actually happen. A, B, and then C, right? This being the right shoulder and this being the top, previous top. So enough about that. Let's just continue, right? Okay, so wave 3, and I gave an example right here, but wave 4 is, and as Georgia uh, said earlier, she hates wave 4. Well, I don't, and I'm gonna explain why, because I just gave an example before, and a very valuable note is that a wave 4 will typically end its complex structures, and most of the times it is complex, right? Because wave 2, remember, is rarely complex. Rarely implies a double or triple free. Not even triple free. That's by far. I have hardly seen a triple free in my lifetime of charting with Elliott waves in a wave 2. So most of the times, complex structures appear in wave 4 of an impulse. So thus, that being said, let's say for instance, that's one notice for wave 4. But another notice would be that the 38.2 would be the default measurement for its retracement. Yeah, and the next one would be that it would end its structure, its entire correction within the price action territory of a previous wave 4 of a lesser degree, right? Within wave 3. I already explained it 2 times. I also gave an example as well. It could actually retrace more, like 50% of wave 3, but that only implies that would only be possible if wave 2 was complex and wave 4 is actually a sharp correction and not a complex correction. Because remember, corrective structures, they alternate one another. So as I said previously, wave 2, if it's simple, then wave 4 would be complex, and vice versa, right? So yeah, I am explaining this right here, and in an impulse, wave 4 does not enter the price action territory of wave 1 only in an impulse. However, in a motive wave, under let's say for instance a leading diagonal or ending diagonal, it can and it will. That's how the structure is designed to unfold, right? So keep that in mind when charting and when labeling and everything. Yeah. So yes, it is kind of frustrating for some traders, because it's it is actually developing most of the times complex structures, and this is precisely the reason why traders are facing challenges, and this is precisely the reason for the complexity behind it. And yeah, traders, they kind of they tend to have a main count and an alternate count, not to mention that sometimes they actually contradict one another, right? So most elititions, I mean some elititions, and I'm actually having discussions with elititions, with traders that are also, I mean, traders analysts which are using Elliott Waves as their analytical method. And I'm actually surprised and glad when I'm actually reaching out to people that have this are labeling a structure the same way I am, right? And they're surprised as well. So you see, this is when you actually know that you're on the right path, right, in your way of thinking. So it is hard. It is, sorry, rare, but if you're right, you're right, and somebody else will be right, just like you. So never mind the subjectivity. One thing's for sure. Um, sometimes using Elliott waves, even if you're not, let's say for instance, if you're labeling a let's say you're labeling a structure as a 1 2 3, and you're expecting 1 2, and you're expecting the 3, right? And it's not 1 2, it's an A B, and you're gonna, obviously, let's say for instance, you're gonna look for the upside. So you have the A wave on the upside, and then you have a corrective piece in the B wave, right? But you're not labeling as that. You're labeling it as a 1 2, and you're expecting a 3. Well, regardless of the scenario, a bullish a bullish swing would occur, right? So if you're going to label the corrective structure in the previous, which you thought it would be a 2, it's in fact a B. But if you would label correctly that pullback and the corrective pattern, doesn't matter. You're still going to have the right direction. That's what trading is all about, getting the right direction. Yeah, yeah. Anyhow, let's continue. So wave 5 is the final leg, yeah, and it actually ends the dominant trends main swing, right? Before it's about to pull back. And as I mentioned before, it's accompanied by divergences, and it's actually, I actually like this wave, particularly in an ending diagonal, which is like, for me, an ending diagonal at the end of the fifth wave is like a unicorn on the end of the rainbow. I'm really, I love this wave. And this is precisely because this possibly confirms the end of something, right? Which most of the times wave 5 ends a structure, right? Regardless if it's a C wave or something. And I'm just gonna give you an example right here on what I'm seeing possibly starting. Sorry, yeah, we'll see. But let's say for instance in a wave 3, and this is sorry, in a wave 5, and this is not a wave 5 necessarily, right? But it is a wave. It could be a wave 5 right here. So all I need is basically a pullback and another overshoot for something to actually occur. But I'm just going to give you an example right here on what I would be comfortable with seeing on the dollar index would be an ending diagonal right there in the last swing of that C wave, and in the last swing of the fifth wave of C. But overall, I'm labeling Dow Jones with the first leg of the main correction, which is basically primary wave 4 in my labels right here on this chart. And I know this could be subjective, right? But so were people when I mentioned the possibility somewhere around here, was mentioning the possibility, and this is mostly visible on the S&P chart, but possibility at the ending diagonal, which I did a video right here explaining the possibility of that scenario occurring, and everybody was yeah, subjective, going against it, and guess what, this happens, right? So I'm labeling this intermediate A red as the first leg of this primary degree for blue. Now the point is that this entire wave 4 is a corrective pattern, should be a corrective sequence, right? But this A is the first leg of it, and the B is a corrective swing, but it's in fact correcting the first leg of the larger correction. You see, there's a conflict of degrees, conflict of correction. Not to mention that because this wave B is complex, yeah, um, implies a double free, right? Which I'm labeling as a W with multiple overlaps right here, as you can see, right? W, and then X, and then A, B in a running flat where this leg goes beyond the end of A, and this leg goes basically beyond that, the other one, the start. So like this, the structure, right? So this leg does not go beyond, sorry, it's a running flat, does not go beyond the end of this swing, and this swing goes beyond the start of that swing, right? It's not an ABC, I'm labeling it as a WXY, right? In a running flat in a B wave. So you see here a complex structure occurring, which is correcting this, which this is correcting. You know, this is the start of a larger degree correction, and there's multiple degrees here contradicting with one another. In simple terms, it's a correction correcting a previous correction, right? That's the reason, hence the reason for the complexity behind. So AB, and then the unicorn, the C wave, which is looking something like, you know, ABC, longest swing in an ending diagonal. The longest swing is usually wave 1, yeah, wave 2 in a similar expanding flat. And I know what I said about wave 2, but this is an ending diagonal, and you guys should actually know that in ending diagonals multiple overlaps and overshoots occur. And yes, something which is obviously mentioned in the part 4, right, which is available for the actually no, it's in, I think it's in part 3, which is next, by the way. Yeah, let me just see. Yep, ending diagonal, so page 12. Yeah, there we go. Yeah, so this is how I'm labeling Dow Jones in that last C leg, yeah, with and you guys have part 3, most of you present. Yeah, if I'm sure you do, because otherwise you wouldn't be present here. And we have a full house right here, you know. So anyhow, the point is that how I'm labeling Dow Jones in that last C leg is as a 1, 2, 3, 4, 5 in an ending diagonal, yeah, as with an ABC in each swing within the pattern, right? So ABC 1, ABC 2, ABC 3, right? The only thing that I don't want, right, I'm not comfortable with, honestly, and I'm thinking to move this 3 right here, yeah, because wave 3 mustn't be the shortest wave, yeah. So by labeling with the fibs from 1 and 2, I have 100% right here, yeah, and a wave 3 ends there. So I cannot have the wave 3. And this is a very valuable notice to me right now, because I'm thinking that this could be wave 5's end, and I should be thinking of moving this right here, right? And wait 1 second. All right, moving that right here, and a wave 5 will typically end with an over shoot, right? So we'll see how this actually unfolds. One thing that I can say is that this could be a vibration zone right here, and a bearish divergence would be very nice to actually see something like this. So you have the main one, yeah, and then this is it, the secondary divergence for the possible um, bearish scenario. So yes, it is moving, it is moving on the upside. However, in my point of view, even though it's creating all-time highs and it's supposed to do that, because it's the way I'm labeling this entire structure, it would be either in a running or expanded flat, because the B wave actually goes higher than the start of A. So it can either be an expanded flat, which imply wave C to go beyond the end of A, or a limited one, in which you imply wave C not to go beyond the end of A, right? In a scenario like this, in a structure like this. And then the bull market to possibly continue. However, if this is in fact an expanded flat, then the structure would look like this before. So we'll keep an eye. I mean, that's what politicians actually do, right? So we spoke a bit about the ending diagonals. Most common structure in a wave 5 would be the ending diagonal, um, especially in the fifth wave of the fifth wave. So after that, obviously the trend corrective legs actually occur after you have a 1, 2, 3, 4, 5, and then you obviously have a wave A, B, C. And when I went over these swings a bit earlier, I mean wave A, mentioning that wave A could go most of the times it actually goes in the price action territory of a wave 4 of the previous dominant trends degree, right? And wave B, I mentioned that it usually goes at 50%, 61.8. It retraces 61.8 usually off wave A, but it can actually exceed towards 78.6, but also to even exceed the start of A, right? Because it's a B wave, and this wave is known for its complex structures, just like wave X, even though, I mean, wave X is even more complex sometimes, right? Especially in triple free. So anyhow, the point is, wave A starts the ABC correction, wave B corrects wave A. I also explained the reason behind the complexity in wave B, because it's correcting wave A, and wave A is the start of the larger degree correction, so it's a conflict of degrees right here, hence the reason for the complex structures occurring in wave B, right? That's also the reason why I said before, wave B mustn't ever be labeled with a sharp correction, right? Only on special occasions, special cases, but most of the times, I would say 90%, even 95%, wave B would imply a clean structure formed out of free swings, free waves, free entire swings, with the corrective structures within it also having free, clean swings, right? That's how you label correctly a B wave. Now the C wave, of course, is the most traded wave from this and similar from this ABC correction, and similar to wave 3, it's clearing up everything. I mean, it looks like an impulse. It is impulsive by nature. It's supposed to make somewhat of a progress within the correction, right? And giving the correction the ability to end. And the reason behind wave C actually being formed out of 5 legs, and it's always formed out of 1, 2, 3, 4, 5. Under no circumstance wave C should be labeled as an ABC or a free wave sequence ever. It's never formed like that. it always would have 1 2 3 4 5 clean 1 2 3 4 5, either an impulse or an ending diagonal. Yeah. Which I'm actually explaining in that. Let's say, where is it? Ending diagonal. Anyhow, yeah, I think it's here. Yeah, right here. Ending diagonal, right? So wave C in a downtrend of a wave 5 or a wave C, or in an uptrend of a wave 5 or a wave C. And these are all the guidelines. I also written some other guidelines right here for you guys. So as you can see, similar to wave to part 3, part 4 also has these very important characteristics and guidelines, which I'm personally using. But similar to this, I mean, let's say for instance, part 3 has been focusing on motive waves, while part 4 represents the most important ones, in which it's focusing on the corrective structures, all of them, right? So back to charts, right about there, right? So let's say now, where was I? Yep. Okay. So this the C wave also. Sorry. C leg implies 1 2 3 4 5 5 legs within its swings always, right? And it's ending a structure. And one valuable notice that I will actually give you guys right here, and I'm just shooting with these things towards you guys because they are the most important ones and they are the key to my successful analysis. Everything that I'm saying, when I'm saying that it's important, it is important. It makes a big difference when labeling. And I'm pretty sure that we have some Elliottians right here in our rooms, right? And if you agree with me, and I'm pretty sure if you're good at it, I'm pretty sure you agree with me. So a wave C is ending with 5 waves, right? And one other valuable notice I will actually say is that before a trend reaction and a trend change, right? Similar to this, let's say for instance, we're in a wave 1, we completed the wave 1 right here, we're retracing ABC. Before a market either trend change, right? Because remember, this trend needs to change right here and continue for the upside, right? But before a change will always, I mean, correct, this structure will always end with 5 legs, and the change will always start with 5 legs, regardless of how wave 1 actually looks. If it's a motive, a motive wave under a leading diagonal in a wave 1, or an impulse in with 5 clean waves, doesn't matter, it has to have 5 legs. So what I'm saying here is that a trend change, I mean, it would a swing before a trend change, a swing would end with 5 legs and start with 5 legs, always. Under no circumstances start with 3 legs and then draw, then continue. No, that's not a proper impulse or motive wave. Yeah. So that's the thing. Now, fractal pattern, right? And already in the beginning of this course on this image, I actually explained to you what I mean by fractal by nature. It's basically uh, these swings, the waves actually containing subwaves, and the patterns reoccurring because they're naturally like growing. Okay, in order for the market to have progress, it has to have continuation, right? And for the continuation to occur, fractals actually occur, and they become more complex over time. And I'm just going to give you an example right here so you guys can understand what exactly what I mean by that. um, and let's say for instance, going on the Euro USD, yeah, on the daily chart, I'm just going to show you here what I actually did. And that's not the only one, right? But anyhow, the point is that I use this structure, which is a copy of that structure, but disappeared right there. Okay, which is a copy of that structure, and it moved. I mean, it started moving on the upside, right? But how did I know when everybody thought that this is a breakout of 1.15 and I mean, euro is doomed. I mean, it's going to the French elections gap, you know. Well, there was a pattern right here. There was a fractal pattern which I've actually used, and I'm gonna show you what I mean by that, right? And I was actually, you know, fractal pattern bullish until 120 or 1215. We'll see. It hasn't. I mean, it went to 1.18, but how it went? That's what I did before on the 2-hour chart. Now, let me just do something right here, okay? So let me just clone this chart, and I love these tools. Yeah, I'm gonna take this pattern right here until the actual end of it right now. Okay, so what I'm gonna do is I'm gonna shrink it, yeah, and place it where we want it. Let me just show you what I mean by fractal and reoccurring patterns, repetitive patterns. Yeah, so anyhow, as I said, they're imperfect by nature. They don't have to resemble it, I mean, 100%, but it's um, the structure behind it. It's the appearance, right? How they actually look, does the resemblance behind one another. So let's see. Can we actually use this to predict Euro USD in the future? I know it's amazing, right? Okay, getting a few more questions. I'm gonna finish up with this, and then we'll make a quick pause for some questions. So let me just show you what I've noticed. And remember, everything from here on wasn't there, right? I just had this, right? I mean this. So I took that pattern from the entire, what is this? Um, yeah, I took this pattern which took it um, yeah, a long time, 671 days, almost 2 years, right? Yeah, and I took that pattern, I took a look at it, and I noticed something. I noticed the similarity behind it. Allow me to explain, right? So you have a move on the upside, move on the upside, correction, correction, move on the upside, higher than the previous point right there, right? And then you have move on the downside, move on the downside, right? Then you have free swings, sorry, right there, and then free swings on the downside. Then you have something complex with a triangle right there. You have something complex with a triangle right there. Then you have a big fall, and you have a big fall, right? And then this happened. Well, let's continue, right? So we arrived this far. I mean, it started bouncing on the upside, right? We don't have a correction right here similar to this, but we do have a correction right here similar to this. So what if? Question mark, right? So you can see that this actually would resemble a possible running flat, but it will also, this could actually be a B wave. Yeah, it could be a B wave. Either this is an A, this is a B, and then this is a C. But what are we gonna do with this, right? Not really that. How I'm labeling it is as an A, B, even though it doesn't have a clean look. Right, to clean free swings sequence, it is in fact a complex structure. Yeah, it's a complex structure right there. So I'm labeling it as an A, B, and then 1, 2, 1, and then 2. And this is a French elections gap right there. Yeah, and another valuable thing that I would say about gaps. Yeah, the relation between gaps and Elliott waves is the following one. Basically, gaps actually occur in the third wave. Yeah, it's called a continuation gap in Elliott Wave trading. When I mean a gap usually forms when a sudden surprise actually happens, right? At the opening of the market, obviously. And this usually happens in the freeze or in the start of a wave free. So the reason, the way I'm labeling this is as a 1, 2, 3, 4, and then the fifth wave, and then an ABC, right? Or a complex structure, doesn't really matter. But the point is that somewhere, somewhere around here, this structure is labeling, and this is a complex correction. Yeah, how this would unfold, we don't know, but it kind of looks like it could want a head and shoulders formation, typically for a wave B, and I explained this before, right? So if we were to use this as a possible scenario, right? We have a complex structure here, and this puts us to think that this could be a complex structure right here, but that will leave us with a rally, right? And then some correction, and then the upside. And let's see how that would actually occur, right? Actually look, right? Shoulder, head, shoulder. Who knows, right? Anything can happen. So this is basically an example of a fractal on the Euro USD, which I've used for that. But yeah, even on the top here, I was actually present. And allow me to actually share with you some thoughts, right? Let's say right here at the bottom in somewhere December 2016. This was, yeah, December 2016. What I've noticed, I've been labeling it differently, and but anyway, as I said, using Elliott Wave will allow you to spot a swing before it actually occurs, right? So yeah, moving on. Later on, January 2017, I was expecting basically a rise, drop, and then a rise. So you see, this is when I got a surprise and it broke through this, and this is where everything cleared up for me, right? And then I, let's say on September 22nd, so I remain bullish, right? That was September 22nd. I was like thinking, because here most people were looking for the turn, right? And this actually happened. I put a message right here, yeah? And then it started at 1, 2, 3. But in the meantime, right, when people saw this as a possible head and shoulders, I was still bullish on Euro USD, and again this message, right, with a continuation. So yeah, now I posted this preparation article, and then when I actually saw the pattern possibly completing, I've posted again, and I made that video for you guys, right? Now let's move on to the you're welcome, you're welcome, Prem. All right. Okay, so let's continue with the ebooks, and let's just finish up right here, because this webinar is taking a bit too long, but I mean, it has to, right? And I'm pretty glad, I'm actually glad I'm seeing so many people still with me right here. And if you guys stay till the end, I will give you guys some very important insights, let's say, on some things that I'm seeing possibly occurring according to the actual wave counts, right? So let's move on right here. Wave degrees and labeling, they're obviously all waves, as they are, fractal by nature. They should be labeled somehow according to their time period, right? And these are the labels. These are the labels for them, right? And the the time period in which they unfold according to their degree, right? So for instance, if they're an intermediate degree, monthly, weekly, or daily. I wouldn't say daily, I would say monthly or weekly for an intermediate wave. Yeah, if daily time, or the daily chart, let's say. But if it's an intermediate, and only if it's an A wave or a first wave, I would say weekly, right? But if it's a corrective B wave, would be a monthly, because wave B will, and this is another guideline, wave B will typically exceed wave A in its time period in which it's unfolding, at least 2 times of A. Right? So wave B 2 times more greater than wave A. A Fibonacci relationship, let's say there's not much to talk about this because I wouldn't want to go into it, but it's something amazing that actually occurs, and the waves relate to one another with using the Fibonacci sequence and Fibonacci relationship, and these numbers can actually can actually be found in the Elliott Wave sequence. Yeah, let me just explain to you what I mean by this, right? Yeah, right here. Okay, let me just make this a bit bigger so that you guys can actually understand exactly what I mean. So in a motive impulse, we have wave 1, right, which is 1. Then we have 5, yeah, because wave 1, cycle wave 1 is formed out of primary 1, 2, 3, 4, 5. So it has 5 primary waves within it. Primary 5 actually have intermediate black 1, 2, 3, 4, 5, right? It's also from the 5 waves, but these 5 waves are also from the 5 waves. Yeah, so you have 1, 5, 21, 89, right? So 89 in a cycle, in a cycle wave 1, you have 89 minor waves, right? In a corrective structure, you have in the first leg, I mean ABC, which is 2, yeah, the wave 2 is you have one swing, one leg. So you have 1 and then you have 2. It's basically counted as the correction leg. So it's one leg. This, yeah, 1, then 5, yeah, and then 13 within these, all these things. Then 55, right? 55 minor swings in this. So you see, they kind of relate to, I mean, they actually relate to the Fibonacci sequence, Fibonacci relationship. Okay, and golden ratio actually reflects Fibonacci measurements when you're using Fibonacci extensions, retracements, etc. Right, especially retracements. Most likely you will look, most of the times you would look when measuring waves, such as the example which I've previously gave before, when labeling, let's say, projecting wave 3 by labeling wave 1 with its retracement wave 2, you'll typically look for the 161.8%, which is the golden ratio, right? Also 261.8, right? Or when you have an extension already in the wave 3 and you're measuring wave 3's length with its retracement wave 4, which is 38.2, which will lead you to 61.8 Fibonacci extension of wave 3 and 4 for wave 5 to determine, of course, possible end of wave 5. Because you already have extension, would make sense because wave 5 must resemble, if you have an extension wave 3, then that would result in wave 5 resembling wave 1 in its duration and length. And that's how you use the Fibonacci's, right? And this is something else that I did, which I've done right here with this primary waves. Yeah, sorry, with the by displaying the Fibonacci numbers, right? So thus you can actually see in a cycle wave 1 you have five you know 5 waves, then 3 in wave 2, then 5 in wave 3. So you have the sequence 5 3 5 3 5, which leads towards 21, then to 89, then 377, and so on and so forth to infinity. And guess what? These are all Fibonacci numbers. It's amazing how this market works. And some some EA, some automatic trading systems actually use this sequence, because if I were to go back on this, on the price action right here, let's take the the Euro USD, for instance, right? This being a corrective sequence, right? You will actually have, yeah, how many swings? 50 something, right? Where is it? Oh, no, I passed it. Nope. Come on. All right, 55, right? The Fibonacci number. 55 in a correcting stick, thus being ABC, right? We'll have 55 swings. And some but some people which are only using, or EAs, let's say, programs only using, so you have, let's say, for instance, in this ABC you would have 55 swings, and some people are actually counting this, or automatic systems counting these swings, higher low, higher low, higher low, and so on, until they arrive 55, and then change of trend. Amazing, right? Amazing how many tools could be used, and amazing what um, how the market actually unfolds its sequences, right? So that's enough for part two. Now next is the part three, and the last one that I'm gonna do, because part four will be reserved for live account holders, and this webinar is recorded, so it will be available for viewing a bit later on, right? Plus it's live on Facebook and YouTube. Now, motive waves, right? Part three is about motive waves, and by motive waves, what I mean is either an impulse or I mean, all of them, they're motive wave. An impulse is a motive wave, but an impulse actually contains an extension. An ending diagonal or a leading diagonal does not present an extension. In fact, it's basically not presenting this extension, and it's doing the opposite. It's presenting overlaps, which is not supposed to happen in an impulse. Hence the reason why wave 4 overlaps with wave 1, because it's a motive wave. I mean, it does make progress, but somehow that progress is restrained. Because remember what I tell you, when it started with wave 1, let's say for instance in a wave 1 leading diagonal, right? Previous trend is still somewhat in power, right? And wave 1 represents the start of a new trend, but it has difficulties proving that it's not developed. Hence the reason why I said wave 1 is difficult to label. So you have to know that that's coming. That's the point. A wave 2 zigzag correction of wave 1 would typically give a nice hint, right? So motive waves. Right now, let's say for instance an impulse is actually explained right here. So yeah, these are some this is a view on how you should not label a an impulse, right? Now let's say for instance motive waves, they're labeled as with numbers 1, 3, and 5. Okay, and regardless of their structures, they are designed to make progress in favor of the dominant trend. Yeah. Now, most of them contain violent moves, rapid moves, rallies, etc. Okay, especially wave 3. Now, wave 3 in this motive waves, especially, especially in the impulsive, which in an extension, wave 3 mustn't be the shortest wave. So as long as it's either longer than wave 1 or 5, yeah, it meets the rules. Hence the reason for this figure right here, in which I'm actually explaining wave 2, the guidelines, right? Wave 2 mustn't go beyond the start of wave 1. Wave 4 mustn't overlap with wave 1 in an extension. So in this case, we'll not label this. We'll label 1, 2, and then 1, 2, 3 in the extension, right? Right. And then this other clip in which I'm figure in which I'm explaining 1, 2, 3, 4, 4 overlapping. I mean, entering price action territory of wave um, wave wave one and two, overlapping with wave one. But the point is that this could also be either an extension or it's not, and it's 1, 2, sorry, A, B, and then C, and then some sort of complex structure actually starts. You'll be able to notice this once you actually, the more time you spend on a chart, you actually notice these things. Yeah, especially if you know the guidelines with between 3 and 5. So yeah, this could actually be labeled as a either a running flat. I mean, this fourth wave to be the end of a B wave actually. So you have a wave A and then A, B, C in the B wave, and then boom, a C wave, right? Either that, or you actually have a 1, 2, and then 1, 2, 3. Yeah. So anyhow, they are disallowed this way of labeling anyway, right? In either scenario. So not even in a leading diagonal or something like that, because it doesn't. This would imply diverging lines and not converging lines. The lines are not squeezing towards one another, right? So the impulse. The impulse is basically, if I were to put this simple, yeah, when you see the chart and it makes a big impression over you, I mean, you clearly see the move, it smacks you over the face, then it's an impulse, right? That's an impulse, or the rally, or etc. So if I were to actually look at this Euro USD daily chart, this is the impulse. Yeah, it's a clean, sustained swing in a rally, continuous rally in which, let's say, for instance, in this case, Euro US dollar performed nicely towards the upside, enjoyed a nice bullish impulse, right? That's what an impulse actually is. Yeah. Now, the impulse is indeed the most common motive wave, and as I said, for the dominant trend to remain dominant, it has to make progress, and the impulse represents exactly that. It's designed to make progress. So yeah, I already explained that wave 4 never overlaps with wave 1 in this impulse, only under a motive structure ending or leading diagonal. Wave 4 is allowed to enter wave 1's territory, but in an impulse, wave 4 will never ever enter wave 1's territory because, as I said, needs to make progress, and an impulse needs to be in favor of the dominant trend. So the dominant trend main moves and waves in favor are, as I said, 1, 3, and 5, right? And most, I mean, one of these three waves, 1, 3, or 5, would present an extension in order for the um, trend to have continuation, right? And the sequence of an impulse, very important, the sequence of an impulse is always 5, 3, 5, 3, 5. Yeah. We're talking about an impulse here, and I know that some people would say, "Oh, that's not true, Richard. Um, it can be free, 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 free." No, we're talking about an impulse. We're not talking about a motive wave. A motive wave could be a leading or ending diagonal, in which case, yes, it could unfold as a free, 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 or 5 free, sorry, as a um, 5 free, 5 whatever, right? No, actually, it can only unfold like a free, 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 or 5 free, 5 free, 5. Anyhow, regardless, yeah, in an ending or leading diagonal. But the point is, under an impulse, you will never have a different structure than this: 5 free, 5 free, 5, always, with no exceptions. This is what makes the difference between an impulse and a simple, a motive wave. Yeah, between an extension, if I would put it the right way, and a motive wave, right? So the dominant the dominant trend uses 1, 3, and 5, and the wave 2 and 4 represent the pullbacks of them, and these pullbacks are only normal, and it's a natural process that needs to occur in order for the dominant trend to for the actual cycle to have continuation, for things to make sense. One thing cannot go up forever, right? It needs to react, it needs to retrace, it needs to retrace, and while it's retracing, it's gathering power for the next moves. That's how the market actually unfolds. So as I said previously, the extension represents those sustained rallies. I was talking about the free or freeze a lot, right? So let's say these are some examples right here on the bull market and bear market. Let's say extensions, okay, and I'm giving some examples here. Yeah, if wave 3 would have usually wave 3 presents the extension. Yeah, that's for sure in an impulse. Now, if wave 3 has the same length as wave 1, this will actually imply wave 5 to present the extension. And remember, one of these waves, 1, 3, and or 5, needs to have an extension. This is how the continuation actually occurs, right? It's only normal. So one of them has to have an extension. So if you don't have an extension in either wave 1 or 3, then most probably you would expect wave 5 to have the extension, right? So if the wave 3 indeed extends, then wave 5 should resemble wave 1 in duration and length. And these are very valuable guidelines right there when using Elliott waves, right? Especially when measuring them with the Fibonacci sequence, right? With the Fibonacci extensions. Yeah, because the Fibonacci extensions are actually used for wave measurements under certain, default percentages of retracements. Yeah, for instance, wave 2 retraces usually to 61.8 of wave 1. Wave 4 usually traces 38.2 of wave 3, right? So yeah, if you know this, then you can actually use the Fibonacci extensions the right way. Yeah, these are some examples of the free or freeze extensions, which I've previously drawn on the charts. But let's say, for instance, primary wave 1 and then 2, intermediate wave 1 and then 2, and then minus 1, 2, and these small minor free also presents an extension in it, and also presents an extension within the third impulse, within this small wave. You see, that's what I mean by fractal by nature. So that's how the market unfolds, and this is precisely the reason behind correct labeling. So you should know when labeling a wave 3 and when labeling an impulse, when labeling an extension, you should know what to expect, right? And you should know your patterns. And as I said, this doesn't really this is not valid only for corrective patterns. This is actually valid for impulses as well, because the impulses move with specific Fibonacci lines, Fibonacci percentages. So if you know how to measure these, then you're okay. This webinar is not designed for that. I will leave these things for either private sessions, which obviously part 4 holders and live account holders will, as I said in the beginning of this, will reserve a private session, private training session with them. But mostly for the live account holders, I'm gonna start doing regular advanced sessions in which I'm going to go through the charts and do it basically as a regular, as an update, for instance, on live market conditions, and discuss and basically explain possible scenarios and all that, right? So the extension occurs in wave 3 and 4 and 5, right? This is the one on the left. This one an extension represents in the third wave. Yeah, third wave of the third wave, the free or freeze. That's how we eliticians call it. Now the fifth wave extension, you notice that wave 1 and 2, when 2 unfolds, and then wave 3 resembles wave 1 in duration and length. Wave 4 retraces, obviously it's 38.2, and then Wave 5 presents the extension 1, 2, 3, 4, and then the extension in the fifth wave of the fifth wave, right? 1, 2, 3, 4, and guess what? This is also extended. You know, fifth wave of the fifth wave. So that's how these things unfold. And a correct way of and a tip on how to spot when an extension is most probably going to occur would be the following thing. Yeah, when you have an overlap of wave 4 with wave 1, then you should consider labeling it like this. Yeah, because you have, let's say for instance, 1 and then 2, primary wave 1 and then 2, and then intermediate wave 1 and then 2, then the extension wave 3, right? Because if you label it like on the left, 1, 2, 3, 4, wave 3 is shorter or shorter than wave 1. But not only that, wave 4 overlaps with wave 1. You don't have a valid wave count. You just violated 2 of the total of 3 main rules of Ralph Nelson Elliott's legacy. So no good, right? 1, 2, and then 1, 2, 3. So you start counting the extension. And then of course 1, 2, and then 1, 2, 3, 4, 5, right? And this 3. So anyway, yeah. Now a truncation, which is this thing is a truncation rarely occurs, and I do not really agree with a truncation. And I have an example on the, where is it? Yeah, GRX on the, I don't like truncations, honestly. I don't really agree with them. Eliticians, they call them failures. When, for instance, when wave 5 fails to exceed the previous wave 3, right? But it does have the 5-wave sequence within it. So not sure what to say about the DAX, right? Because this actually on the smaller time frames actually has 5-wave sequence within it. However, it did not exceed that, right? That point. So I am labeling it as a truncation. This is one of the very few which I've labeled in all my years of Elliott Wave labeling. Really, this is one of the only ones. So I'm okay with this, but I could be moving this wave 4 right here. However, for me to believe that, and by using Elliott waves, Fibonacci's, right? If you know corrective, the difference between corrective and motive wave, let's say for instance, right? Let me just give you a one-on-one thing right here. Now, if this is like this and this ends right here, yeah, this wave 4 would end right here. And it makes sense because it has to retest this channel, would need to retest this channel, and would actually imply wave 5 to resemble wave 1 in duration and in length, right? However, right, let's say for instance, the way this actually moved, took it wave, I mean, some things that would contradict this would be wave 4 took vast amount of time compared to wave 2. Really, it kind of take it too much time. Took it too much time. Second thing, wave 3 is longer than wave 1, so it agrees. It's fine, right? We're cool with that. But the point is that for wave 5, I would look for either an ending diagonal, yeah, because an extension cannot really occur. Wave 3 is longer. I mean, it presents an extension already, right? If I were to use the Fibonacci sequence right there, it ends at 200%, so it does present the extension. So we cannot have two extensions, right? If I were to measure wave 3 with wave 4, would end, because it moved already to 61.8, we need to exceed it to have continuation, right? Towards the 200, basically 100% or 200%. So most that this can go is 12,580 according to this wave count in an ending diagonal, if it even gives that, right? But it would take it a bit too long for this structure. Okay, So I am not comfortable with that scenario as of now, and what I would be looking for would be the 100% of these two swings. Yeah. In which I would be curious to see the reaction around here, where this could be, I mean, an A, B, C, a simple flat correction, yeah, for a continuation. Possibly a wave 2 or a B wave. We'll see. This structure is complex anyhow, anyway, because all these is unfolding under a descending channel under the form of an ending diagonal. Things are things are complex, right? More complex than what's written in these in these ebooks, right? And if I were to load that DAX on the daily, right, you will see what I mean, yeah, because this structure, yeah, yeah, because this structure is unfolding in my view as a possible either ending diagonal, yeah, like this, but it would imply one more swing on the downside. So I would be curious to see how powerful that swing is, right? And by the way, at the end of this course, I would actually go more into possibly what I'm seeing and what would explain on the Orbex blog with this article, yeah, because it's pretty. I mean, for the indices wise, right? It's pretty interesting, yeah, especially on the Dow Jones right here, and S&P and Nasdaq, which I'm explaining a possible rise, and it's going close to that. It's meeting some fibs. Anything can happen, right? And I'm curious to see what would actually happen. So, gave an example of a bull market truncation. When things are, the explanation behind the truncation would be the signs of exhaustion, right? When a failure occurs, or where how us eliticians actually call it, the truncated fifth. Yeah. So I gave an example on the DAX. Let's say, where is it? Yep, this one, right? When this wave 5 black minuet 5 fails to um, exceed wave freeze high, right? So yeah, as I said, it's one of very few truncations labeled in my years of Elliott Wave labeling. So this phenomenon rarely occurs, that's for sure, right? But um, as I said, I'm not looking for truncations, but and it's very hard for me to accept a truncation, even harder than having a expanded or running flat in a wave 2, right? This is even harder. So anyhow, let's go into the diagonals, right? I'm mentioning the structures right here, and diagonals can actually take multiple forms under either expanding diagonals or expanding diagonal, which is the one on the left right here, yeah, or a contracting diagonal, either leading diagonal or ending diagonals, the contracting ones, right? A leading diagonal cannot take form under a expanding type, right? Where the lines are diverging, sorry. A leading diagonal can actually take form. A leading diagonal can take form under the form of converging lines, yeah, but also an ending diagonal. So this could actually be on the right side. This would be an ending diagonal, most probably, right? Now these are some examples of ways of in which the ending leading diagonals could actually occur. And the difference behind them is the following one. Let's say, for instance, you have a wave A. This is a leading diagonal in wave A, yeah. um, and an ending diagonal, let's say, in the C wave, right? So one thing that you need to know is that leading diagonals, they either form in a wave 1 or A, and ending diagonals either form in a wave 5 or C. Yeah, pretty much that's everything to it. Now I'm explaining the ending diagonal right here, which is the one contracting. Either it's in an uptrend where it's contracting towards the upside. It's like price action is being drawn towards those vibration levels before it gets the hammer for the big retracement. Yeah. If it's a wave 5, it's a big retracement, right? If it's a wave C, it could be a big, not even retracement. It's actually a continuation, right? So in an uptrend, I mean, the ending diagonal, and you guys actually have these things, so there's no need for me to go on each and every, type of, each and every guideline I mentioned right here. Um, the ending diagonal, let's say, for instance, wave 4 actually overlaps with wave 1. Yeah, and the ending diagonal, as I said, is located in the 5th wave position or in the C wave position. And it's a reversal pattern. Usually it's a reversal pattern. It can actually happen in a wave 5 or C, okay? And it takes a wedge shaped form. Yeah, I mean, by that wedge shape, I mean contracting. Lines are converging, contracting towards one another. Okay, now expanding ending diagonal is basically when wave 5 is the strongest wave and presents obviously the overthrow, and the ending diagonal actually presents the overthrow. All diagonals actually present overthrows, or an overthrow of the trend line, the limited trend line, yeah, of the waves. But wave 5, typically in an expanding ending diagonal, wave 5 is the strongest wave, and sometimes wave 3 can be the shortest wave, but in particularly in this swing. Yeah. Now a leading diagonal is different because it occurs either in a wave 1 or A, right? Also takes a form of a wedge shape. The lines are also contracting, right? Wave 3 could be the shortest wave sometimes. This is discussable, but it is acceptable under some circumstances and some eliticians' views. But one thing is for sure, in the leading diagonal, wave 1 is the strongest swing, yeah. Um, and wave 3 cannot be shortened than wave 5, right? So usually I'm not comfortable. Sometimes, as I said, wave 3 is the shortest swing, but on very rare occasions, and I'm not comfortable with labeling that type, right? Usually wave 5 is not shorter than, wave 3 is not shorter than wave 5. Now, wave 4 also overlaps, similar to the ending diagonal. Of course, they're diagonals. In all diagonals, wave 4 overlaps with wave 1, okay? And yeah, wave 2 retracement is sharper and and sharper than wave 4. I'm getting tired here, guys, so we're gonna wrap this up a little bit. Now, this is located in the first wave position or in an A wave within an ABC correction. Yeah, so it's either forming in a wave 1 as a leading diagonal, or in a wave leading diagonal in a 1 2 3 4 5 sequence of an impulse, or a wave A in an A, B, C corrective structure. Corrective structures are labeled as ABC, right? And then a leading diagonal can actually form in wave A. A leading diagonal only forms in a wave A in a corrective structure. If you would think of an ending diagonal, then yes, it would form in a wave C of a corrective structure. Either that, or in a motive sequence, in an impulse, in a wave 5. Yeah. So that's about it for the wave. For the Elliott waves, parts 1 to 3. Hope I covered some important aspects and guidelines so far. And as I said, part 4 is the most important one because it actually contains all these structures. Especially, let's say for instance, yeah, contains all the structures and especially the corrective instructions. As I said, if you want to master Elliott waves, what I would actually advise is to know your patterns. This is the most important aspect of and the challenge behind successful charting, successful labeling in Elliott waves. So as you can see, labeling the zigzag right. Explaining the zigzag right here, just like I explained the motive sequence, motive waves previously. However, these things are very, very important right here. Yeah, and tips and tricks. Yeah, and explaining, basically giving some examples of how the zigzag can act as a bridge between combinations, complex WXYs, WXYXZ, double or triple trees, right? Yeah, like this. Let's say, for instance, a double zigzag right here on the left, right? Um, yeah, and so on. Either a double zigzag right here, or a zigzag and then a triangle, zigzag X and then triangle. So that's being ABC, which is W, and then ABC X, and then ABCDEY triangle in the Y. So making it basically a WXY. So and so on, right? Or let's say, for instance, a zigzag right here, ABC zigzag. So 5 swings in A, 3 swings in B, 5 swings in C. So it's a zigzag. 5 sequence is 5, 3, 5, and then ABC in X, the interruption. Yeah, and during the advanced sessions, I will actually go more into this wave because this is very challenging wave, and if you're able to notice this when it happens, you are clearly one step ahead, right? Then the temporary interruption for the complex structure. So you have W ending there, then you have the X, then A B C A. So if this A starts with a free swing sequence and not 5-swing sequence, it's not a zigzag, right? It's a flat. So this being an irregular, like an expanding flat. So you have free, 1, 2, 3, 4, 5. Always 5 waves in C, as I mentioned before, right? Then of course triple freeze, in which, let's say, the one on the left is a triple zigzag. Then combinations and bridges. So this entire complex WXY XZ is starting with a zigzag, right? So you have 5, 3, 5 zigzag, then X, then 3, 3, 5 flat, and then a triangle, right? So W, X, A, B, C, Y, right here, and then X, and then A, B, C, D. Pretty challenging, right? But if you know how to spot these things, it's quite a pleasure, right? And then the flat explained, and similar to the zigzag, of course, explained how they unfold. So multiple types of flats, like simple flat, expanding flat, running flat, and the difference behind them and the guidelines and everything behind them, and how they unfold, the complexity behind them, and how they actually they can become a bridge between combinations, so they can actually allow a complex structure to actually form and they start, right? So let's say, for instance, you have a 3, 3, 3, and then 3, 3, 3, 3, 5, right? In an ABC, so expanding flat right here, the next, then another expanding flat, then a next, another expanding flat, right? Triple, irregular, also called expanding flats. Irregular is what they used to call it in the old days, but now it's called, most traders are calling it expanding flat. Anyhow, and then types of triangles. I'm pretty sure you guys are actually very familiar with triangles, right? And I'm explaining each type of triangle, how they're formed and everything, and guidelines to them. The most important running triangle, the most common type of triangle, a contracting triangle, which is a running contracting triangle these days, in which the B wave exceeds the start of A and then continues in a contracting manner, and combinations WXY and WXYXZ, some guidelines, very important things right here, okay, and how they actually unfold, and examples of double and triple freeze. But this is what makes the real difference. Every elitician, or at least those who are actually starting Elliott Wave labeling, um, have, I mean, have some questions in their mind. The main question is, how do I label a corrective, a complex WXY or WXV, a complex structure, right? Where do I start? How do I know? And this and that. Well, this only comes with time. Hence the reason why I'm gonna keep this exclusively for the fourth part holders, right? And as I went in the beginning right here, specific Fibonacci extensions and measurements for each type of extension or motif structure, right? For instance, in this ending diagonal, right? Even leading diagonal, you know, 1, 2, 3, 4, 5, in which it's contracting right here, specific measurements for 1 and then 2, right? And so on. Now, this webinar has taken a bit of a bit of time right here, right? So we'll cut this short for now. Okay. What we're gonna do is we're going to continue this session, but before later on, yeah, in another time. But before that, in the beginning of this webinar, let's do some. Let me just leave you guys with something very quickly, okay? Because I went on the charts while I was going through the ebooks as well. I know it took me a bit of a time, but I just wanted to make sure that I covered uh, you know, most of it. So let's say, for instance, the GBPUSD is dropping right now, and it is possibly confirming this as an ending diagonal scenario. We'll see what would occur. So I'm just gonna go, let's say, for instance, on the 2-hour chart. So I'm gonna start right now with the dollar index, right? So the way I'm labeling the dollar index is within, as I said right in the beginning of this webinar, would be in a first swing, yeah, the main swing of 3, right? So we have 1, 2, 3. I mean A, B, C, in which this B wave is this one. Okay, so we have the main swing A, then W, X, Y, and notice that the X wave, I'm labeling it as a triple 3. W, X, Y, X, Z, right? This is precisely the reason behind it. I mean, I'm labeling this because this is correcting this, right? I mean, this X wave is correcting the W, but this W is also correcting this. Guess what? This is also the first leg of the previous correction. So, you know, this is correcting this, this is correcting this. You have a conflict of degrees. Hence the reason why you will find double and triple freeze forming in this type of structures. The reason is very simple. Conflict between corrections correcting one another, right? So I'm labeling the B wave, the minute B red, as W and X, and then A, B in a flat, and then 1, 2 on the feds right here, the extension in free, or actually, I'm not sure if I should label this for, put it right here, and then start labeling this as an ending diagonal in the 5th leg, right? The reason behind that is that I'm not comfortable with this free swings sequence as a something, a 5th wave, right? Unless it's the start of an ending diagonal. So the ending diagonal is the only structure that I would accept right here before a bearish divergence could be confirmed. Okay, so knowing this, this could put me on the right track with the other analysis, right? So let's say, for instance, if I were to label this as an expanding flat in the wave B irregular, yeah, so we have an AB, this would imply a C wave, and this would also imply a more weakness possibly ahead for the US dollar, right? Let's go on gold. Yeah, let's see the structure on this. The way I'm labeling gold is after this has actually finished, right? After this this swing on the downside has actually finished, then we have, yeah, these move on the upside, right? Then I'm labeling this as a complex double free, in which I'm labeling W, X, A, and then the magic behind it, W, X, Y, right? Making this structure like this, and then possibly this starting occurring for the last time, and then the surprise, right? Because this structure could be actually ending. And the reason why I'm labeling this B wave, minor B light blue, like that, is because it didn't really retrace enough, right? 61.8. I know, okay, it could be enough, but the way it moved on the upside, it has multiple overlaps, and this doesn't really coincide with a wave free extension, right? So I can only label this as an ABC, for instance, right here, in which this was the C, it moved past, yeah. So we'll basically see it actually happen. So right now, we could actually see one more drop towards the 161.8 of WNX Fibs extension. Yeah, in real time it's not that easy, right? But if you have something in your having, you have a guideline, then you know it could actually occur. Now, crude oil, right? Previously in these daily updates, which I'm doing, I've mentioned the possibility for this to rise, right? And what it's doing right now, it's hitting the 200% of A and B with this swing, right? And the way I'm labeling this is in a B wave, right? With the minor X right here red to unfold, right? So we have A, then a complex structure in a triple free, W, X, Y, X interruption again, and then A, B, and then the last C leg performing as an impulse. 1, 2, 3, 4, and the extension in the fifth wave, right? You have 1, 2, and 1, 2, 3, 4, 5. Then this is 3, 4. This would be the end of the last fifth wave, but also the C wave. And yeah, if this is a free, I mean, this is a 1. If this was to be a 1, 2, 3, this would still correct somewhat. It's the way this would correct. You would know if this is an impulse. Remember what I said, if a trend is destined to change, you would have 5 swings on the upside. We do have that. But if this starts with 5 swings on the downside, then the trend has changed. This is how you know. Moving on. Euro USD. I went through this before. Yeah, I'm labeling it as a start, the A wave, right? Right back there. Then an expanding flat right here, in which this could actually form the last divergence at the Fibonacci extensions of waves A and B right here to determine the possible end of C. I mean the C wave to be to complete there. 1, 2, 3, 4, 5, and notice the alternate behind it. If wave 2 is complex, then wave 4 will present a simple corrective structure. Then you have 1, 2, 3, 4. And then all this has to do is move, slightly beyond the wave 3, and it meets all the rules for, even by a tick, meets all the rules for a wave 5, right? Unless a truncation occurs. But Truncations only occur in the wave 5, by the way, but to be honest with you, I'm not comfortable with truncations. Next, GBP USD. Also, I'm labeling this as a first swing and as an A, then expanding flat in the B. Then I'm starting an extension right here, wave 1 and in a B, and then the C wave under an ending diagonal form, possibly doing an bullish divergence to pave the way for a upcoming rally, if that even occurs. As I said in the beginning and in the middle of this webinar, um, my views are mine only and should be treated as simple market commentary. This is not an investment advice, right? This is just, we're just charting. Now, next on the USD yen, I know this took it way too long and the divergence is clearly here. And I'm starting to think that this is possibly the fifth leg, and we do have an extension. What I just need to do right now is just move this here. Yeah. Okay. So this being the 3, this being the 4, implying that we have an extension right here. Okay. So we have 1, 2, 3, 4, 5. That's it, right? So, but also we have 1, 2, 3, 4, 5. After 1, 2, 3, 4, 5 comes ABC. But the way this structure looks, it's corrective, still corrective. This could be followed by something deep. Okay, that's the USD yen on the 2-hour, on the 4-hour chart. Pound Swiss also finalizing a fifth leg on the upside. Yeah, notice the fourth wave right here, and the last attempt. Aussie US dollar, the Aussie again, yeah, doing this structure in which I'm labeling as a overshoot in wave B right here, very complex, and 1, 2. I need to review this. It's becoming more and more complex, so I will leave this for now. I'm starting to think that this could be more complex. It is a B wave, so it has the right to become more and more complex. Okay. NZD, same structure. However, this is looking more, I mean, better than AUD, to be honest with you. I'm not saying that the upside is not there. It's clearly there, but I mean, it's clearly in the menu, right? But for Euro USD and GBP USD, the sites look better, and also for the USD JPY, right? Now, as for the Euro JPY, where I'm labeling this as an ABC, minor, red, then corrective B, and 1, 2, 3, 4, yeah, in a complex structure. And we'll see if this occurs, but one more leg could be in the menu for wave 5, and thus a continuation, because this is a big corrective structure, right? And USD CAD, I've been active right there. Anyhow, so the point is, yeah, for me to leave you guys with something, I would be curious to see what would actually happen at this golden ratios, right? By using the Fibonacci extensions of W and X. Yeah, my main focus, I'll be honest with you, I would, in this current market conditions, I would mostly focus on the gold, euro, and pound, and euro USD, pound US dollar, USD yen, and gold, right? That's what I would focus on, but also the indices. And allow me to leave you with the most important thing. And by the way, thank you very much, guys, for staying until the end. You guys actually, you enjoy being here. So let me just go back. First of all, I will go on the VIX, the volatility index, and when this thing actually starts a spike, like similar to the one witnessed in early February 2018, right? When the Dow Jones actually tanked, right? When it felt like it was no tomorrow, right? That was when investors I mean, complacency period was over. The greed period was over, and then fear kicked in, right, implying the sell-off. So while the sell-off actually occurred, right, then uh, things started going back to normal, but it's the way they went back to normal. Well, the VIX actually performed under of overlapping sequence, right? The Dow Jones and everything around, I mean everything else, U.S. indices mostly, retraced on the upside, but still with overlaps. So this is a question mark, right? If the market found its bottom right here, if this is not supposed to be continued like this, then why hasn't it had a correction and then an impulse? See, this is what you need to ask yourself. What is this? From everything that we went so far, um, we'll just ask a question to you guys right here, and would like you to let me take a screenshot of USD CAD. Shoot me a message, and we'll have a private session, Oscar. No problem, man. All right. Now the thing is, what I wanna leave you guys with, right? What is one question according to what we discussed so far, and according to what we went over the Elliott Wave ebooks and so on. I have one important question for you guys, right? And the question is the following one: what type of structure are you seeing here? Is this the start of bull market, or is this corrective? How do you see it? Because I surely see a corrective piece. I don't know. So I would like you to, shoot me a message. That's what I would. Yes, Georgia, you agree with me. Thank you. Yep, yep. All right, Oscar agrees as well. Thanks, guys. All right, now let me do this thing for you, Oscar. Okay, if you're here, buddy, because of your nice comments, take a screenshot. Okay, so while he's taking this Oscar is taking the screenshot, right? Let me just explain to you guys that we haven't had enough time, and I have this type of analysis previously posted on multiple markets. I mean, let me just give you an example while the screenshot is taken, right? So let's say, for instance, April 23, 2017, I was actually explaining and using, looking at this deep downfall, and then this as a corrective piece in a B wave, similar to what I'm looking at right now, and I will actually go into it. But anyhow, WX and then AB, I was expecting the C wave to start rallying all the way to 100%. So I said, let's say, for instance, somewhere around 1.338 to start a bullish rally until 1.38 or 1.40 if extended. It wasn't extended, but it started from there. Boom, 100%, exactly 100%, right? And then, how did I know, right? It's within the waves. Then, after the fall, and believe me, when the fall started, I was actually present for the breakout, right? Letting traders know as well. Now, after that, we have a pattern, which is this type of pattern, yeah? An AB equals CD in harmonics, let's say, right? um, which, if I can find it, it's this one. Yeah, all right, it's this one, A, B, C, D. Now, right after that, after a pattern, right, obviously it looked like this. So I said, we have A, then we have B, we're going for the C. So you see, even if you're half right, you're still right. This is the beautiful part about Elliott waves, right? Then as the structure became more and more complex, right, I knew that I needed to relabel W, X, Y, X, and then Z, then this being the B. I don't even know if I'm right now, because this is not looking like an impulse neither, right? But it did break out. So it could be something deeper. But if this is a leading diagonal in a wave 1, and then this the sharp correction wave 2, and then we do have 5 waves here, 1 2, and then boom, the breakout. It's on the smaller time frame. This is the daily chart, but anyhow, if this would look as a corrective piece right here and as a free or a bear flag or something, then would be marvelous, because this could pave the way for the free of freeze. So we'll see what will happen. Just wanted to get to share some ideas, some of my views on this USD CAD. All right, Oscar buddy, I think I hope you made that screenshot. Okay, moving on. So yeah, where was I? On the USD, or on the yeah, you're welcome. Okay, on the Dow Jones, right? This is looking like a corrective piece, guys, and I'm pretty um, even though it created a new all-time high, and this is what it's supposed to do, all right? Because previously I've been watching the 100% of WNX, right, of this, but knowing that it created a new all-time high, right? And while this thing, I mean, while the, let's say for instance, while the Nasdaq was creating new all-time high one after another, right? And I'm labeling the Nasdaq right here in, let's say for instance, the February fall, labeling as a W and then X and Y. Thus, I mean, I'm labeling it Nasdaq as one step ahead of the one step ahead of Dow Jones and S&P. Yeah, and I'm also labeling it as an ending diagonal right there, and I will actually go into it. So running flat in the wave 4, then okay, then a bullish sequence ABC, yeah, which is an ending diagonal in the 5th leg, right? So ABC 1, then 2. Yeah, this should be 1 2 3 4 and then 5, right? So leading me to think that this is A, this is B. Is this AB? Well, I think so, because of the way it looks correct, right? So you see, this gives me a hint right here. Something here could happen before any structure would unfold. So this being, let's say for instance, this 3 to be here and this 4 to be here, but it's going to overlap with 1. Then we have a challenge, then we have a thing. Anyhow, why not, right? It could be the start of something. As the VIX is pointing towards a possible spike in volatility and the return of the bears, possibly being around the corner, Nasdaq is below the trend line of the ending diagonal, lower trend line, like it's waiting for to be pushed over the edge, right? S&P 500 on the 4-hour chart, similar to the Nasdaq 4-hour chart previously, has the same structure. I'm labeling the same as Dow Jones WNX, and then A, B in a running flat, and this is where it starts. 1 2 3 4 A, B. Not even sure if this would occur, but you never know, right? So from a from a labeling perspective, these meets all the rules, and it, I mean, I'm just gonna say this live right now, but this can, according to these structures and the current wave counts, these things can actually start dropping whenever they want, however they want, right? If they're destined to go down. Now, as I said, and I'm gonna say it again, this is just a personal opinion, and it's not designed to influence anybody or induce you in any way. You're all grown men and women, traders. You're capable of making your own decisions. So yeah, this is not an investment advice. Now, the structure of DAX is similar to this. I'm just gonna go quickly over EMEA DAX. I mean, I like this index in particular. So let's say, for instance, on May 12, 2017, I was looking at 12,950 as a possible trigger for the bearish sell-off until or at the 12,000 levels. And if I load it, boom, and I said that from there we could see a bullish rally, and it did. You see how the price action has actually unfolded. I'm just loading the new bars. There's no no magic here or mumbo jumbo going on. This charting station actually provides that. So yeah, from the time of the post, May 12th, started dropping. So 12,950, then 12,000, right? As it unfolded, I actually posted again, reviewing the wave count, of course, saying that from 12,000 this thing can actually start rising until 13,300, went above, right? And then of course, um, right here I was actually present on the lower time frames in my room, right? In my online room, obviously. Yeah, and as this thing starts dropping only in the February spike, obviously, because I was present, I told you guys. Yeah, so after that I said that a correction would unfold, then more downside. See, correction, I mean upside and downside. This is the downside. Now, as this thing actually unfolded in the quarter report done for Orbex, boom, starts that thing actually started dropping from there. And as the price action unfolded, and with each article focusing on that, you know, dropping, and again and again and again, you see, and this is not showing me any bullish signs yet. I would be more comfortable with a bearish sequence. However, if a breakout of this channel would occur, yeah, and if and only if I would see a corrective structure here, then I would say that the bull market for the last fifth leg of this could actually be in the menu, right? However, for the DAX, I would be more comfortable with one more downside in order to complete either an ending diagonal in a converging type or a descending channel for these overlapping waves, for these overlapping waves. The way it looks, it could be an ending diagonal, but remember, only even the ending diagonal would provide an overshoot. Yeah, this is what I said in those Elliott Wave ebooks, right? Now, um, yeah, can only defy gravity for so long. Exactly, dual. Yeah, you're right. Yeah, if you're talking about Dow Jones and these indices, for sure, you're right. Yeah, I'm seeing the same thing. Okay, so uh, yeah, I wanted to leave you guys with something serious because I am seeing a possibility, a realistic possibility for the VIX um, to surprise again, like it did in February. So I'm not sure about that, but um, I do have an idea, right? So I just wanted to present it to you guys because I've been screaming this on the Orbit blog for quite some time, and you know how it is. When you say the wolf is coming for enough times, people will start believing that the wolf is coming until it does. So yeah. Anyhow, I hope you enjoyed this webinar, guys. It's time for me to actually go because we've been sitting here for quite some time. Hope you enjoyed it once again. And as a recap, yeah, if you wish to get the part 4 with all the corrective structures and guidelines, I hope I made myself. I hope the information provided was understood and you found it easy to follow me today. You're welcome. Welcome, Georgia. Welcome, Margaret. Excellent. Yeah. Thank you for a wonderful session. Always enlightening. Well, yeah, thank you guys. Yeah, I appreciate your feedback really. If you can actually do me a favor, um, let's say for instance, yep, on the Orbex blog, you'll find this under um, where is it? Trading education. Yeah, webinars. If you could leave, please, if you could kindly, please leave your feedback right here. Yeah, on how you found the info and everything. Yeah, that would be great. For the Facebook Live and YouTube users, you can always comment, right? But For you guys who were actually inside the meeting when it actually started and happened, would appreciate a feedback right here. We I mean, I would truly appreciate your feedbacks. Yeah, you're welcome, guys. Right? Many people right here. Awesome session. All right, thank you, guys. Appreciate your feedback right here. Wish you guys many pips ahead. As I always like to say to all my traders, stay in the green. I mean, until next time, stay in the green and many pips ahead. Bye for now.